Hi.
Hmm.
Yeah, now it will be visible.
Yeah. Let me check it. Yeah. Okay. Thank you. Yeah.
Okay, thank you.
Okay. Now we'll just understand it. I think like my audio is also there. Yeah. Cool. 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 Yeah, so yeah, finally, welcome everyone. Sorry for the delay, there was some chaos. Yeah, so very good afternoon to all the students who are watching from India, and yeah, a very good morning for those students, those of my students who are watching it from UAE. So, yes, today is our first session that we are going to understand it, the broader concept of what is SBR and how are we going ahead with the concepts of SBR. Okay, that is something which is going to be there in the upcoming papers. So without any further delay, let me just open up the PPT for us, that what are we going to go ahead with and what are the course content that we are going to complete it in this fast revision for upcoming December 2020. Okay, just give me a minute. I think it's visible. Yeah. Okay, yeah. We'll be having a confirmation for once. Okay. Cool, cool, cool. I think it's clearly visible. Okay. So yeah, students, before I go ahead with what are we going to understand, I would like to just introduce myself and the subject. So what is SBR? So if I just pick up the word, it's strategic business reporting. So is it very simple to understand SBR? Or ma'am, this chapter or this subject is very difficult and it is not something which is easily manageable. So to be very frank, those students who have not yet given any other paper, because what I presume for SBR is this could be your first P level paper. So people will be having a lot of doubt like, ma'am, how are we supposed to write in the paper? Is it very difficult for me to manage this examination? Or like, is it very simple as we had in skill level? If you have not written your skill level papers, then welcome you all for the first subject of P level paper. To be very frank, the concepts of SBR is something which we already know, because finance reporting, and reporting is something which we have started it from the standard 11th when we just entered into the world of commerce. So as in of now, this is not something which is very new to you all. And definitely if we are seeing the sessions which is like fast up for your examination, so I'm so sure that you all know the crux of what the SBR is. So today we are going to have a short plans for the revision series that we will be coming up with SBR. So if I just say the word SBR, what it is, what is this SBR, what is the full form of SBR? Strategic Business Reporting. So yeah, it's my strategic business reporting. So with this word, we can just cut off with three things, that is strategy. So what strategy will I apply to report my financial statements? When I go ahead with reporting, so where do I normally report? I normally report my financial statements. So if I go ahead with financial statements, then what are financial statements? Okay, financial statements is a combination of set of things. So what is the combination and what are the set of things? So yes people, I am going with the basics so that we can quickly refer. It's this revision, what we are going to go ahead with is a bird eye view on the concepts, and I'm going to touch up the important concepts for us which will be helpful in our upcoming December attempt. Okay, so if I'm saying you about the financial statements reporting, I need to report it in some standards, in some phases. We'll be having an annexure of 5 parts. First, it's the financial position. Guys, financial position, which in normal terms we call it as balance sheet. Up next, guys, we have SOPL and CI. What's that? Statement of profit and loss and the comprehensive income. So what's comprehensive income and all? By now I know that you guys must be well aware of what is comprehensive income, because it is highly required, guys. It's highly required to know what is comprehensive income. Cool. Third, we'll be having a statement of cash flows. Up next, we'll be having SOCE. What's that? Statement of changes in equity. Changes in equity. Last but not the least, without this, my financial statement, a set of financial statement, is incomplete. And what's that, guys? Yes, it's nothing other than notes to accounts, or I can say some beautiful disclosures. So if I have a set of all the stuff that consists of the financial statements, so let me upcome with the chats with you all. Okay, yes students, so over here I think you guys are getting it. Okay, yeah, just give me a minute. Yeah, and it's clearly visible also. So students, I am live with the chats. Okay, so you guys have any doubt, please give me on the chat also. So yeah, we'll be catering the doubts on and on. Okay, cool. Okay, so this is something which is very basic that we know. So I'll just give one definition for my SBR. This is one of my favorite thing which I normally say in everything. That is, SBR is reporting for tomorrow's success today. So why to wait for the next time to come up when we can create a success today by reporting it at a proper pace? Reporting needs to be done. And see, to be very frank, why is this subject for us? Why is this subject for us in the ACCA? And that too in the professional level, guys. See, after completing this, we'll definitely be a professional. We'll be an ACCA affiliate for sure, and very soon. Yeah. So when we come up with SBR, we cannot expect some MCQs for us. Definitely not. I know those students who have given FR for sure, they'll be feeling, ma'am, FR and SBR is quite similar and it's easy. But when I go up in the professional level, today if you just account it with the financial terms, if I just make out some figures, okay ma'am, I'll get the marks. If I tell you just by finding up the financial figures, they will not give you marks. Why? Financial figures a normal accountant can also do. Just after completing the graduation, I am well equipped, I can find out the figures and I can make up. But students, it's not about the financial figures. It's about the analysis that you get it after doing and after checking up the financial terms. It's about a huge concept that we have to cater it. That okay, just getting the financial figures, it's not enough for today, students. It's not enough for today, because financial figures can give you a overview, a comparison, which a normal people can also do. But students, like how did I got that figure? What is the base of reporting that? Can I report it anytime? No. So all those concepts is something which is inbuilt in my IFRS, which we are going to understand it in the subject SBR. So from the exams perspective, so SBR is not MCQs? No, not at all. Not at all. Not at all. Because today we are going to discuss some topics which is relevant from examination and how we are going to cater the paper. Okay. So if I go ahead, students, MCQs will not be touched. Then what? We are supposed to write the 100-mark paper. Yeah, 100-mark paper in a term of theoretical basis, means whatever figures I find it out. Yeah, for example, if they are asking some numericals, I'll find it out the numericals. But based on that and more on that, I am required to do what, students? I am superly required to elaborate them, because my examiner will have not so much of time that he will see, acha, in which cell you have put what figures and where you have calculated. No, he don't have so much of time. He don't have so much of time. We being a professional, we need to elaborate, we need to explain the concepts. Okay, so that is something, the subject about SBR. Moving ahead with the first, the first thing I will definitely say you is about my I'll just give you an intro about who am I. So basically, students, I am Ashwini Bhanushali, a chartered accountant from India, and teaching ACCA, and one of my favorite subject over here turns around to be SBR, ATX, APM, which I'm taking around for 4 years. And I'm even taking up the DIP IFRS, which is one of my favorite subject, because being a chartered accountant, we just cannot ignore financial reportings and taxation for sure. And when I was studying and I have just completed my chartered accountancy, we have our own consultancy firm which I and my husband run, obviously. And we are the owner of Pro Efficient Consultancy since like 3 years. It's around 3 years, and I am into teaching field from since 4 years. So when I was giving my studies, I just could not restrict myself from just like ending up with studies, because studying was one of my passion. So as professionals, I have chose my consultancy to work, and because of my passion, I am over here with the teaching field. And let me introduce about Lakshya. So I know Lakshya is not something which I need to give an introduction for, but sure, we know if I start anything in the field of commerce, one-step solution comes as Lakshya. Means I don't need to cater somewhere else. If I want to get the knowledge of commerce, like it can be anything, any damn course, you can check up CA, CMA, you can take up ACCA, CMA India, CAT, CMA, BWOG, anything if you touch, definitely guys, Lakshya is one-step solution where I can get a super knowledge, like even you guys, okay? And Lakshya is not just a base where the students are going to get upgraded. No, it's each and every one. I being a Lakshan over here, the family of Lakshya, I know this is a training institute where we all are going to get upgraded for sure, right? And over here, we have earned, basically Lakshya, we have earned a good reputation and a power in the sources where we are blessed to cater the candidates from CA, ACCA, CMA US, CMA India, CS, CAT, CMA and BWOG. So yes students, these all are the courses which Lakshya provides. So we are over here providing a platform of all the sources and all the courses at a single destination, that is IIC Lakshya, Indian Institute of Commerce Lakshya. So over here, Lakshya is well known for training institute provided by the ACCA courses. Yeah, if you come up in Kerala and if you ask Lakshya, there will be no single child who will not even be knowing. So basically, it's a better and the best homely place in Kerala where we have touched up with the ACCA resources. Cool. But students, everybody wants an upgradation, everybody wants to go ahead and cater more crowds. So when it is basically an ACCA course in Kerala, we provide over here the teaching with the Malayalam language and the English language. But I know at times the language becomes a barrier which we wanted to cater it more ahead. So we have come up with the classes not just in the language of Malayalam and English. Over here we have our online and offline classes. Yes guys, you heard it right, online and offline classes in the languages which we don't want us to be constrained. So it is basically in English, Hindi and Malayalam. So yes students, we have even introduced the classes in Hindi also. Like not complete in Hindi, but yeah, obviously some concept in Hindi and English. So it will be an English and a complete English batch, and yeah, the Malayalam batch too. So yes, this is about the Lakshya. Okay, upcoming now with our SBR plans. So before I go ahead with SBR, so why are we first of all understanding IFRS? Okay, see, I know this is allegedly not so important from your examination perspective, but yeah, to understand the subject we need to know the course. Only if I know the base and the core behind it, I love the subject for sure. See, today if I'm sitting in India and if I'm reporting as per the Indian gaps, like whatever gaps the normally company had, whatever the country, different country had, I'm cool with it. But today I know my world is not just restricted to my place or my country. No, today the world has shrinked a lot. So because of the globalization over here, I cannot go ahead only in my country. No guys, I want to be ahead, so I want to be ahead and reach to the all the notch where I can like excel my company. So maybe just for import export, maybe I want to have some business set up in foreign countries. Maybe I want to set up some MNCs there. Maybe other company is interested in like investing in my company. We need to go ahead with some FDIs and all. So what if I don't understand? What if I don't understand Malayalam? Guys, understand. What if I don't understand Malayalam? Is it not a barrier? Yeah ma'am, it's a barrier. It's a very big barrier. What if I don't understand Hindi? It's a barrier. Similarly, what if I don't understand the financial statements which the foreign has prepared? What if the foreign country didn't understood the financials which I prepared? Yes, that will be a barrier. So to relieve that barrier, to like just come up ahead and just to cancel that barrier, to minimize the distance between the barriers, the IFRS came into picture, which is just a common language. So when I go ahead with what is IFRS? IFRS, it's international, it's international. So you will say, ma'am, we know this. International Financial Reporting Standards. Yeah, reporting standards. So when I just break up the word, it's international. It's international means something which is not confined to only one country. No, it wants to go beyond one country. Yes, so it's international. Financial could be like any terms. It could be like rupee, it could be dollar. Finance will never constrain them. So it's not just legitimately dependent upon the country's currency. No, it is going to be common for everyone. Reporting is, we have to prepare the financials at a proper reporting phase with accepting all the standards. Means everything needs to be consistent, which needs to be at a single line. Like it is something like very pure at a level which is very same. Okay, so this is something about the initials about IFRS. Okay, now what is our plan? We know that we have lot of standards to learn, and guys, what are the most important standards? Okay, so if I come up, just give me a minute. Like we just need to know what are the standards that are very important for us to understand. Okay, yeah, it's just like cool. Yes, students. So I would like to tell you the most important standards that we are going to cover it. Okay. So over here in the chapter or in the revision plan that we are going to cover it is IFRS 15, that is revenue from contracts with customer. We are going to cover IS 19, I know, employee benefit, which lot of students is having always a phobia that ma'am. IFRS 19 is very difficult. IFRS 19 is very difficult because we have not studied this standard in FR for sure. Even in the colleges, ma'am, we have not touched this. No worries. We'll make it very simple. Then we'll be understanding IFRS 16, which is leases. We'll also understand IFRS 9, which a lot of students have a phobia about the financial instruments which they normally leave. And one of the favorite chapter which all the SBR students have is the ratio analysis. So you will be telling, ma'am, we have a very good concept of consolidation. Where it is? Why are we not understanding consolidation? Students, we have already covered consolidation. Yeah, students, we have already covered consolidation in our YouTube sessions, which I have conducted it for September 2023. And yes guys, this is already available in our channel. So yeah, I thought like why to go on with the same concepts where we can go more ahead. So yes, without any further delay, we can understand it. Okay guys, so this is some 5 important topics which we'll be covering it. And this is our agenda. Okay, this is our agenda which we have to cover it. That is IFRS 15, 19, 16, 9 and ratio analysis. Most of the students find IS 19 tip difficult. Yeah, most of the students find IFRS 9 tip difficult. But people somehow manage to complete IFRS 15, 16 and ratio analysis. See students, consolidation, we know for consolidation we are very sure that now ma'am, the concepts, the exam pattern has changed. Those students who are giving up for the first time, you would also have heard the rumor, ma'am, things have changed, the things have changed. What have they changed? Is the examination question changed? Is the syllabus changed? Is the course contents changed? What it has changed? So yes guys, like if you just see the course content, nothing is changed. Nothing has changed. Then what it is changed? Why there are so much of rumors? Yeah. So the rumors are just because the way the paper comes has changed. So prior to many years, things were like everything in theory or to write. But today, a very good news, which started it from September 2023 onwards, even for the upcoming December 2023, it is going to be there. So the way the examination question comes for consolidation has changed and nothing more than that. Okay, don't worry. We'll be discussing, we'll be having a good word on that too. So yes guys, so how do I normally view my paper? How do I normally view my paper? From where am I supposed to understand? Where am I supposed to study? So everything I'll be just giving you an overview from a very beautiful ACCA study resources. Okay. So yeah, this is my paper pattern. Guys, I know you guys would have like at least once before giving examination. I request you all to please practice in the CBE platform because people know the concepts, but they do not clear it just because they don't have the writing practice. We normally write in the paper and pen, yeah, but see, it's a professional thing. So paper and pen will not work there, right? It needs to be something on computer. It needs to be on computer where your spelling is not going to be counted. The knowledge that you possess is going to be counted. Yeah. So we'll be having 4 questions worth 100 marks each. There will be specific task given and we have to find and analyze. It carries a huge marks and solve the questions and solve the calculations. Okay. Analysis is the most important thing because just finding figures will maybe give you marks, but how will I interpret it? Because interpretation works very well. Because students, you know what guys, if you're finding it out something in your spreadsheet, okay, this is your spreadsheet, okay, over here there is some x amount. If you're taking up the total, your examiner will not come into this cell and double click like what is your formula that you put. No, you have to like, this is simple for like calculations. You have to interpret, you'll have to analyze the things like what have you given up in the question and what are you going to find it out. Okay, cool. So I hope you are understanding these also, that we have to analyze and solve with relevant calculations. Cool. Up next, what is my examination thing? Now yes students, even this terms around to be very important, because people have this phobia a lot. I know, okay, things have changed. Yeah, when I was yeah guys, so when I was taking up the first session, yeah, when I was taking up the first my class for online, students students asked me, ma'am, there is some change in SBR. What change? Is the change very huge? Is the change very drastic? Or ma'am, it's a normal change. So yeah guys, the examination is basically for 3 hours and 15 minutes for sure over here. And over here we have 4 compulsory questions that we have to answer it. And yeah, the information will also be tested for sure. Guys, this is how the paper pattern goes ahead with. Okay, this is how the paper pattern is. If you can see it, guys, my paper will be for 3 hours and 15 minutes. Okay, my paper will be for 3 hours and 15 minutes. This is the time which is allotted. Over here, section A and section B. So basically, students, I'll not be having how much minutes they are. It's not just 180 minutes. No. It's 3 hours into 60 minutes plus 15. So you get 195 minutes to solve 100 marks paper. Guys, so what is your per 1 mark? How much minute you can allot? Students, please, a humble request. Please complete your paper in time. Otherwise, definitely you are going to not complete your paper, and maybe something you will not be able to write it. Okay, so your per 1 minute means what? Your 1 mark means how much minute you can allot it. Okay, so maybe 195 divided by 100. So for 1 mark you require 1.95 minutes to complete. That means not even 2 minutes. So sitting at the first situation, I cannot take up so long time, guys. I cannot take up so long time to complete my paper. So please guys, we need to be very quick in writing the papers also. Yeah, I'm just deleting it off things because yeah, okay, yeah, cool. Up next, what it is, how am I going to give the paper? So how many questions will I be having? So yeah students, there are 4 scenario based questions. If there are 4 questions, do I have any options, like whichever I want to choose? Guys, no option. No option means legitimately no option. Means your paper time is basically 3 hours and 15 minutes, in which there are 2 sections that you all have to answer. Yes guys, there are 2 sections, you all have to answer it. Section A consists of 50 marks. Section B consists of 15 marks. Ma'am, if I'm having 4 questions, how are they bifurcated? So 2 questions in section A, 2 questions in section B. Like this. 2 scenarios, 2 questions in section A, 2 questions or 2 case scenarios in section B. If it's section A, something you guys know which has been changed is the change in section A, guys. It's a change in section A. There is also the case 1. The case 1, guys. The case 1, where first you were having some theoretical thing where you have to explain about the favorite concept, which is consolidation and so on. But today the concept has not changed. The concept of consolidation is as it is. Guys, I'll say you, please do take care. First of all, the consolidation chapter has not changed, and the topic of consolidation has also not changed. So what it is? So when you say that there is a change, yeah, in the first question, when people have a phobia that yeah, there is a change, what type of change it is? The first question, which is case scenario. So guys, it's not a change. It's not a change in the question. It's not a change in the theory. It's not a change in the knowledge, but it's a change in the way the question comes. First of all, now only theory used to come. Only theory. Like, please explain, please give the valuation, the calculation for goodwill. Please give us the calculation for the NCI, non-current interest, and etc. But today they have told, beyond that students, now it's your responsibility to calculate the things. Means you will be provided with one financial statements, that is one drafted pre-populated spreadsheet. When the things will be mistaken, when the things will be mistaken, the things will be not proper. You will be having some erroneous things, some mistake things you will be definitely having. Okay, some wrong figures you will be presented, where something in the schoolings we used to do, some pre-drafted financial statements they used to give, some adjustments they used to give, which we used to adjust it and make our financial statements true and proper position. Yes, students. So over here also, we will be having some pre-populated spreadsheet which are erroneous. For example, there will be certain mistakes given in the question. We will be sitting and correcting it, understanding the statements, and the core concept of making this will be definitely the topics of consolidation. So students, do not worry, we will be doing some questions in the classes on the revision series also. So yes, students, this is what there is a change. First, all the theory used to come, all the theory over here, all the theoretical knowledge used to be there. But today, it's not theory, it is the practical question which is going to be there. So if it's a practical question, guys, means what? Practical questions, your pre-populated spreadsheet will be given, things will be wrong. Next to that, over here we have to make the adjustments, and please put it over here the corrected figures. So this is how we are going to understand it. And yeah, to be very frank, in the notes they have not given so much of questions for sure about this, but in the YouTube which I had made it for September 2023, nearly like 5 or 7 questions we have covered it. And guys, truly, like my students who have given up the exam were telling me that yeah, it is very much helpful for them. So yeah, we can go ahead with that also. So in this phase, in this time, I'm not going to consider the consolidation, sure, but 2 papers which we are going to do about the mocks, definitely in that we'll be doing it. Okay, so after considering the important topics, we'll be going ahead with some 2 mocks. And in that, the first question which is again the compulsory, because nothing is optional, so we'll be doing the 2 questions, sure. Then 30 marks thing is going to come in the first case scenario. Yeah, the first case scenario turns around to be 30 marks, okay, which consists of the group entity and some other standards. Like when it is group entity, now students, to be very frank, please consider it group entity means the first question will be consisting first of all of 10 to 14 marks of pre-populated spreadsheet. Okay, pre-populated spreadsheet means the balance sheet will be given, the financial position, or guys, or cash flow statements, or statement of P&L account will be given. Okay, this all stuff will be given. Okay, I'll just cancel it and I'll just open up a blank slide. Cool, give me a minute. Okay. Home. Okay, I just want to insert one new slide which needs to be blank so that we can write it and we can understand it clearly. Okay, for the first, guys, please try to understand. In the first question number 1 for SBR, definitely the first point, yeah, we know in the examination it is not like only one question, that's all. You will be having some background of the question, you will be having some exhibits, means okay, read the first exhibit, understand, give the question for that. Second exhibit, third exhibit, fourth exhibit. So you will be having over here some annexure. In annexure, you will be presented with some financial statement like balance sheet or financial position, or P&L statement, that is SOPL, or you will be having a cash flow statements, some or the other thing which will obviously be misstated. So now we are going to correct it, and that will be only for 10 to maximum 14 marks. That's all, 10 to 14 marks. So what about remaining topics? Okay, question number 1 of section A is going to be of 30 marks. So if it's 30 marks, ma'am, what about like remaining 20 marks or 15 marks? What about that? That will be the concepts from, like, this is what I have analyzed, so I'm just telling you guys. Yeah, the paper needs to be in this fashion only, and this is what our analysis says. So guys, yeah, my over here this could be like A part maybe, then B and C can be what, guys? It could be from any group entity question, yeah, and we know even there is a concept of associate, yeah, there is some concept of JV, or a question if it comes from the financial instrument topic. Yes guys, yeah, it normally comes from financial instrument topic, which my students knows. One topic which we have covered it in the class, very important, which was, if you remember, compound financial instruments and something like preference share. Maybe they'll ask some of the other concepts. So yes guys, this goes over here with the first question which may come up in the paper. Yeah, over here. This is something which we understood it. Then what about case 2? Okay, if it's case 2, for sure you will be having again not 20 marks paper. Yeah, I know the second question will be 20 marks, so as to cover 50 marks, and in that there will be one part which can be 5 to 6 marker, which comes from ethical, and definitely it comes from ethics. So what's ethics? Like some of the other misstatement would have been made in the financial statement, like the company is not working well. You being a professional, you have to analyze whether the things which are worked is proper or not. If it's not proper, please correct them, please correct them. So yeah, ethical part will be there. Then we'll be having some 2 case scenarios, which is 25 marks each. And guys, these case scenarios, like this is what I feel, okay, these case scenarios are comparatively easier than this. So ma'am, can we start from section B? Yes, you can. See, it depends, because these standards now normally will be easy standards, but again any standard can come up, any standard. But to be very frank, you cannot ignore any standard, because like the students are getting failed for getting 49 marks, so even 1 mark is getting up important. So guys, but the most important standard which you cannot ignore if you want to get it good marks or you want good ranks, IAS 19, guys, IAS 12, please write it somewhere. IFRS 9, IAS 32, IFRS 16, please write it down some or the other way, please write it down, because guys, this is gonna be very important things for you all. Yeah, so these are my important standards, IAS 32 and IFRS 16, which I wrote it over here. IFRS 16, I wrote IAS 32. Please, this employees benefit, income taxes, you just cannot ignore it. You just cannot ignore it. Up next, IAS 37. At times the question comes from IAS 37, IAS 16, and some small standards. Obviously, ratio, and never ignore any concept of consolidation, or IFRS 2, which is share-based payments. So all this stuff becomes very important for you all. I hope it's very clear. Yeah, clear. Yes. So yeah, we can now just read it once, and yeah, we can see the further things. Okay, so yeah, changes in SBR examination, simple, from 2020 to 23 onwards. The way of asking question has changed. The concepts, I will highlight things. Concept is not changed at all. So you don't need to go and buy some other books, buy some other resources and study from there. No. If you know the conceptual clarity, any damn question comes, we'll be at a position to solve it. Yeah, the way of asking question is going to change. That is, question number 1 will be mixed up more of theory. Yeah, before like it is going to be more of theory mixed up with the concept of, there was something before, before there was more or less theory of goodwill, NCI and all, but now they will give you a draft financial position, that is basically in the Excel, that is pre-populated spreadsheet they'll be giving with some wrong figures. We have to rectify it and make it our own financial statements, which will be having the concept of conso, associate, cash flow statements. This is more to real life, because in real life we have to adjust. For example, students may have to adjust the draft conso P&L statement, or draft conso financial statements, or consolidation or cash flow statements. So it could be either the financial position, either the SOPL statement of profit and loss. Just give me a minute. Statement of profit and loss account, yeah, statement of profit and loss account, and OCI, other comprehensive income, or it can be cash flow statements also. So there will be certain, yeah, in that adjustments will be made. Adjustments of what, guys? Adjustments of, you can find it out, the errors will be there. Which type of errors? Maybe accounting errors, yeah, maybe changes in accounting policies, maybe some disposals and all. So alternatively, if there is anything which is unrecorded transactions, for example, we need to record it. For that also there will be some adjustments, like from IAS 19 you can get it. That is something like defined benefit plan. If you don't know IAS 19, do watch the video, which will be maybe tomorrow. I'll going ahead with that. as and when the time permits, which standard we can do it for the first. Yeah, so we'll be understanding that. Maybe some concepts of foreign exchange issues, which comes up with IS 21. Yeah, we can have the concepts. So yeah, the students have to discuss it and get the financial statements correct. Yeah, this is the way the question is going to come. Now we have just analyzed how the paper comes, what are the things. Now from where we have to study. See, please take up the time. And now I know if it's 3rd of November today, you have just 1 month left over, and I hope that everyone over here who is going to attempt it in November 2023 or maybe upcoming, if you are going to attempt it later, definitely your studies may be remaining, or I expect those who watch this revision series, you guys have touched all the standards for sure for once. Pakka. And now it is as a situation, just with 30 or 35 days, what am I left with? First and the foremost thing is, please complete your exam kits. Please complete your exam kit, which is there from the, and very big disclaimer which I wanted to give, guys. People make mistake. You are over here to give ACCA, SBR, international and not UK variant. No. So whenever I'm taking up with the examination form, I'm not supposed to tick on UK, okay? It's an international. So whenever you have some examination kit, I'm so sure everybody must be having exam kit. In that, there are some questions. Okay, there are certain questions. From the questions, guys, initial questions are from international SBR variant, and down to that there are some 10 questions from UK. You're not supposed to practice that UK questions, okay? You're supposed to just practice that SBR question, that is international SBR, okay? So people get confused, huh? Even at the last moments they'll ask me, so Papa, don't do that way, okay? So I have a lot of telegram that things, okay ma'am, please tell now which questions we have to do. Guys, you are supposed to tick only international SBR and not UK. Clear? Yes. Okay, yeah, this is something which we need to know. Then after completing exam kit, what should I do? Very important, guys. You have to read the technical articles. You have to come up with technical articles also. So what is technical articles, guys? If there is any change, if they want, like for example, just imagine, we know when we are sitting over here with SBR, we know in a single question of exam kit also there is no just one single standard. So you'll be saying, ma'am, it's a combination of this chapter, this standard, everything, a combination. So how can I study? So it's a technical articles. They have certain questions which have recently come up. And to be very frank, I expect a single thing in examination also from the technical articles, which gets updated every now and then. Yeah. So at every attempt, it is going to get updated that way. So in technical articles, guys, they'll be giving you a mixture of different standards, which can help me out to write the paper. So yeah, technical articles becomes very important. Plus, you know the concept of current issues. Yes. So current issues means, yeah, we have standards for each and every expenditure. Like we have a standard, like how we are supposed to book it in our financial statements. We have the concept. But what if I say you, there are certain issues. For example, what if I'm telling you about the cryptocurrency? Ma'am, cryptocurrency, it is an asset. But which type of asset? Yeah, ma'am, cryptocurrency is something which we cannot see and touch. Yeah, ma'am, so it's an intangible asset. Apply IS 38 on that. Do you know the concept? Yeah, IS 38, it is acceptable, it is applicable. But there is some changes. Yes. What changes? For that, we need to know the current issues. Yes. Then, if you are done with the studies, if you are done with the technical articles and all, guys, have a writing paper, have a writing exam, have a writing exam. And where? For that, guys, in CBE platform, to write the thing, we have blank space. We have blank space also to practice. Along with that, we have a hell lot of practice papers, question papers, we have past papers, we have some specimens. So please do with the specimens also. And yes, to understand for which books to refer, people have a question, ma'am, should we read the Kaplan kit, should we read the BBP book? I'll tell you, whatever book you practice, okay, please don't switch the authors when it is at the end situation. Please don't switch the authors, because different authors have their different language in which they attempt the paper. cool, in which they write the answers. Whatever you are reading it, whichever author you are following it, go ahead with that. So yeah, over here for Lakshya we have our own notes where we have covered a lot of concepts just from the core concept of ACCA study resources. Yes students, yes, it's ACCA study resources, which is the best practice hub where we can get a lot of information. Yes, so a lot of students don't know about ACCA resources. As I know, SBR becomes the first P level paper, and I congratulate you all because most of you all have came up in SBR after getting all the exemptions. So I know many of the people don't know how to attempt the paper, and that is the reason people don't get cleared if they don't practice in the CBE platform. Okay, so don't worry, we are over here to show you how to work on the CBE platform. So let's begin. Yes, I'll just show you. Done with that, my Chrome I need to open, and yeah, I'll be going ahead with everything that you need to know. Just give me a minute. Yeah, are you able to see the Chrome, guys? Yeah, maybe things will be like little lesser in your screen, but I eventually think that it is visible. So everyone who have logged in over here and registered with the ACCA thing, you guys will be having your own ID password, right? You just give me a minute. Okay, yeah, just give me a minute. Okay, yeah, I'm having a chat with Sukanya ma'am, yeah, you can give me a chat in the that also. Okay, yeah, in the live session also. Yeah, so Sukanya ma'am has returned in this September. For some people ethics comes for 20 marks, and for it came for like 12 marks, for us 8 marks. Some other standards are asked. Yeah. So in question number 2 now, which I've showed you, definitely you'll be having a part of ethical standards for sure. Like it could be 6 marks, 8 marks, 12 marks. Okay, but then for sure other standards will also be affected there. Yeah, okay. Okay, thanks. Okay, I'm having just a chat. Okay, cool. Okay, yeah. So cool. I think now we can go ahead because I was just wondering with the chats, because since a long time I didn't update it with the chats. I didn't saw the chats also, but it's okay. Cool. Just give me a minute. Now we can go ahead with the ACCA resources. Cool. Yeah. I don't think like there are any chats now, live chats. Cool. Good afternoon. Yeah, good afternoon. Okay, ma'am. Yes, Sukanya ma'am, you can just message me over here also, okay? Because in my phone I just opened up the chats. Cool. Yeah, chalo. Cool, yeah. Without any further delay, we can start with my ACCA resources. Okay, guys, it's over here, myacca.acccaglobal.com. Okay, this is the website over here. I would like to just make it big if it is not visible clearly. So as I don't have my user ID login password, I will be using my student's ID password. Obviously, you will be provided your login ID password also, so you can access on that. Students, the ACCA resources is very pretty, where you can get a lot of information about any subject. You'll be having so much question paper, you'll be having so much of practice things. So over here, it has welcome my student. Okay, yeah, welcome. Please guys, can you see on the left hand side, dashboards? Down to that, it's my qualification. Please enter to my qualification. So this is one of my student. So how many papers you have cleared it and all things will come up over here. Down to that, if you can see in the right hand side, let me make it some big so maybe you can see it. Yeah, can you see this book and examination, detail about the examination history, finder tuition, etc. Guys, in that we have the ACCA study hub. Please click on that ACCA study hub, which is the best study hub where you can get any information about the courses. Every chapter you get it, every chapter, beyond that every chapter you get some chapter quizzes, you get some questions which I want everyone to practice. Okay, so yeah, so if you can see, I'll just make it bigger. So most recently exam, because I have always wondered about this. Can you see this? Strategic business reporting international summary for September 23 and onwards. Please click on that. Then we need to go to exam. if I go to exams, I'll get the chapters, I'll get the course content what I want. Okay, in that each and everything I'm not going to show, because this is something which I have already shared it in the last time's video also. So if someone has doubt in detail, I have shared it in the first class. Yeah, so students, over here we'll be having some introductory, what are the things, what are the syllabus and study guide. This third line now, please read that, syllabus and study guide, in which we'll be understanding what is my syllabus, what are my course, and how it is going to come up. Then we have, let's say, chapters. Ethics, if I want to know about ethics, let's say, so ethics, no, I'll give it out with one standard, which is something our favorite is, which we are going to go ahead with today. Let's say I'm going ahead with IFRS 15. So yeah, I can take up, let's say, this standard also will work well for me. Okay, if it's chapter number 5, okay, if I'm going to chapter number 5, I can click on this chapters overview. You will get to know, I'll just make it small, I think it is visible, what are the course content that we are going to understand in chapter 5. Then going ahead with the table content, the definitions will be there. Up next, the concept. Up next, the next, I'll just show you. If there is anything to explain, I'll explain you. Okay, some definitions. Now comes the example, which I want everyone to do. So examples, we'll be having a couple of questions and solutions downwards, which will help me to frame the answer. Okay, next. If I go ahead, maybe I'll be getting some questions to be done down. Example, accounting treatment, definition, it comes up further. Earnings, key points, whatever it's relevant, they'll frame it. Manipulation, exam. If you can see, activity. Now this activity is very important that you all cannot ignore. So activity 1 will be some question they'll be framing. They'll be showing some questions. If I hide it, I will not get the answer. So maybe all the stuff is given in the question. Then if you want to know the answer, you can just do show. You will get the answer, how you have to present it in the paper. So for understanding all the stuff, you need to have a writing practice. You have to have a writing practice. And so on, it is going to go ahead. With this, we have completed the syllabus cover. Now, what is more important is over here, if you can see related questions. If you can see here in the right hand side, yeah, related questions, yeah guys, related questions, practice questions taken related to this topic, and chapter 5 quizzes. We know here by the time, yeah, this over here guys, in this quiz there will be MCQs, and for us in SBR we don't have MCQs, ma'am. We are having completely descriptive questions. Yeah, okay, but maybe my conceptual clarity, for that they have given, okay, we can solve. If time permits, we can solve. For example, if I'm choosing with the questions practice related to this topic, if I click on this guys, I'll get one question. Okay, I'll get one question, something about Hamilton, of some investment properties and all. I will read the question, which is exactly how the question comes in the paper. Oh my god, seriously, yeah guys, we'll be having a story behind. Yeah, this is a story background. Then we'll be having some exhibits. Maybe this will be the first exhibit, second, third, you'll be having some extra information, and last to that we'll be having the question which is required. Students, the best tip which I can give you is, please take this into consideration whenever you are giving the paper, whenever you are writing the paper. You don't have hours and hours to write the paper. No ma'am, we don't have couple of hours to write the paper. So what will I do? Will I take a lot of time to just write the paper? No. Then what should be done? Guys, please read first what is required. Once you get to know what is required, then you go ahead with the story. Otherwise, what you will do? You will take a time and read the question, you will read the story, whatever is given, background. Then you will come up with the question, what is required. And again, you will read the story. Why to waste so much of time when you can save a lot of time? So what we can do? We can first read the question. So yeah, if I read the question, maybe I can understand a fair value of something they have asked us. Maybe some comparatives they have asked us, which is accounting policy is justified, something about IFRS, accounting policies. So maybe I'll get a hint. If I read this, now I want to write the answer, right? So what can I do? I can plan the answer. So over here, we know we are supposed to write the paper in which two things. Yeah, maybe something like Excel I'll be having, something like spreadsheet I'll be having, and some or the other word I'll be having, processor. So over here, I'll start planning my answer. I have planned my answer. Okay, I've confirmed it. I know this is wrong. Okay, Now, this is my question, and this over here is my answer. This is what I wrote, but this is eventually what they want. Guys, what can be better than this? You get everything. You get everything over here. So continue. Okay, it's completed. Then, further, if I want to understand the quizzes, let's understand with the start quiz. If it's first question, the directors of some company wants to change the cost formula. Okay, the cost formula of measuring inventory from FIFO to LIFO. Okay, FIFO, first in first out to average cost. Which is it? Is it an accounting thing which I want to change it? My students knows this. If you guys are online, I need the answer. Yeah. If you guys are online, please give me the answer. Yeah, it's on. Yeah, I'm just waiting for the chats also. Yeah, live chats. Okay. The directors of the company wants to change the cost formula from FIFO. Remember, from FIFO to LIFO. If I want to go, ma'am, LIFO is prohibited. Yes. Last in first out is prohibited as per IS 2. We know that basically the inventory's valuation, it's not allowed. So if I want to change the policy, what should I do? Should I go retro or prospective? Yes, we don't need to go retro, ma'am. So which of the following is correct for valuation of inventory? The change will represent a change in accounting estimates. It's an estimate. Guys, tell me, is it an estimate? You'll say, ma'am, we remember the estimate is something which you have to think, like from the perspective of like depreciation and all. Yeah. So this will not be the estimate. The financial statement will be adjusted prospectively. Like, what should be done? Let's go ahead. Neither one nor two. This is what I feel. We have to go retro. Let's confirm D. Going ahead. I'm not reading the question. I'm going ahead. Okay. I can review my answer. First only I read the question. I got it correct. But second I didn't read, and later on though I didn't read only. Okay. So if this is wrong, for example, I will review it. So what was the question? Which of the following change is IS 8? So they'll be giving some questions. I wrote, for example, A, but the answer was C, for example. So they have given C. Will be your, no, sorry, I chose C. A is the correct answer. Cool. The correct answer is A. For example, if I don't understand, ma'am, why it is A, ma'am, I'm getting confused. What is the concept behind it? What I can do it? I can learn more from this topic. I can go ahead, learn more from this topic. And yeah, if something else is given, they'll just book it for help. So guys, this is what the chapters are. You can go ahead with the chapters. You can read that way. And at the end, if you get, I'm having with the chats. In the left hand side, it is a practice. Go with the practice. You'll be having very much questions. Yeah, lot of questions. By the end of this YouTube series, I'll be giving you which are the important questions which you all have to practice it before you go to the exam and write it in the CBE platform. It's not that these are the only questions which you have to practice it. These are the questions which covers very much concepts, which are going to cover a lot of concepts. So I'll be giving you limited questions, like 15 or 20 questions I'll give you. But guys, that becomes very important, because definitely if you practice that questions, a lot of concepts will be clear. For example, if I have done chapter number 5, so yeah, additional questions from chapter number 3, additional questions from chapter 23 and 21, chapter 5. Let's say chapter number 5 I can do for practice. Start practice. I'll be having some errors and estimate questions. What am I required, etc. Something they'll give, and this is the thing. Okay, this is the question. Discuss how to show. I'll plan my answer. I'll confirm. I'll get the correct answer also. So guys, when we have so much of beautiful resources with us, why not to take an advantage of it? Yes. So this is my ACCA study hub, which we need to understand it. Beyond that, guys, the most important figure which we need to analyze is to start writing papers in the CBE platform, because I told you, people will like not able to complete the paper, and that is the only drawback in SBR. Okay, if I go ahead in the exact situation for SBR, go to examination, I will show you one thing which is again very important, which shows up me as, can you just see this thing, guys? Technical articles. After every chapter we have technical articles. Yeah, this is the technical articles. Please read the technical articles. If there is anything given up, please read it. This chapter is etc. Continue. If I want, I can go ahead with the technical articles. For more recent articles, please visit our ACCA global thing. Yeah, for more articles we can go there. Cool. Yeah, so all this stuff needs to be understood. Up next, after completing this, guys, if I want to keep any notes, you can add any notes. If you want to keep any highlights by the end, so you can keep any highlights also. If you want to have some quizzes, you want to see some flashcards like something like ethics, or maybe I go back what are the important topics. So this is my flashcards, means a small topic on which we are going to understand. Okay, cool. So that will be the situation. Up next, I would like to show you about the ACCA. It's done. Then center complaints, if you want to have some center complaints, you can do it. Then we have CBE practice platform. Now this is a platform where before going to examination, you can feel a homely examination. Means before going to write the exam, you can have a practice like how the exam look like. For example, over here in the catalog, the right hand side, we have our subject. So over here it's B, over here SBR. Please, I request, it cannot be UK, it cannot not be UK, it's international. Go international, you will have ACCA resources. You'll be having so many things like past exam, practice exam specimens. So let's go ahead with the past exam thing. Past exam. So over here something we are supposed to, I'll just make it small. So something over here we are supposed to assign it so that I can write the paper. I have already assigned it over here. So I'll assign this paper for me. For example, unassigned, I'll assign it. So this is my paper, sample exam September 2023. If I have assigned it, I'll go to my assigned materials. I will check which paper I have allotted it to myself. So it's over here, SBR specimen, SBR international and past papers. So this is what I have allotted it to me. Start. If I start it, I'll get exactly how am I supposed to write in my paper. So there are a lot of introduction which they have given us. And yeah, this is our 3 hours and 15 minutes paper which we have to attempt it. 400 marks. Yes. And 10 minutes prior we have to set and etc things. Yeah, we can have 2 sections, section A and section B. I'll show you like everything we have to go and do it next, and we have to scroll the entire screen. Yeah, this is what it is. Time allowed. This exam is not timed because this is for your practice. So for practice it is not timed, but in the real paper it will be timed for like 3 hours and 15 minutes. Cool. This is divided into 2 sections, section A and section B, worth 50 marks. First question will be 50 marks, second will be also 50. First it will be divided into 2 questions, which is 30 marks and 20 marks. But the section B question will be divided into 2 questions, which is 25 and 25 each. And again, all questions are compulsory. Up next, okay, you are ready to give the exam for section A. Students, please take care. Now this is a question which came up in the paper, like some practice question. First, banana company is a parent company, it's a listed company of the company. Oh, it's a listed. Listed means what, guys? Listed means what? I'll just highlight it. Okay, it's listed company means something about parent company, subsidiary company. Ma'am, the first question always comes up with what? Consolidation. Yes. So even this question is from the consolidation part. Okay. So in that they have given you the exhibits. The following exhibits are available on the left hand side. So what are the exhibits? First exhibit is acquisition of company, grape company, melon company, some acquisition of bonds, subsidiary, and some drafted financial statements. The first exhibit, can you please see the first exhibit, the acquisition of grape? Yeah. So for these, studying provides you the detail of the grape company on 1st Jan 20x7. 20x7, if I want to know, I'll just click on this left hand side exhibit. I can go it and I can read it. What have they given us? About the banana company, 80% you guys have purchased it, etc. Lot of things they have given, lot of things. You have to consider this and keep this in mind. Okay, I have considered it and kept it in mind. I'll cancel it. Okay, done. Cool. Okay, I'll cancel it if it's not going, because this at times it stucks, but this is not the situation in the examination. Okay, in examination things will work very well. Okay, next, if I'm doing it, yeah, just give me a minute. Yeah, previous. Okay, my previous question. Then I'll go ahead with section, acquisition of melon. Again I'll read the second. Okay, I'll have some concept about that balloon. Okay, that will be working well. Then exhibit third, I can read exhibit third. I can read all this stuff for exhibit 3. Then we have exhibit 4, the acquisition of some another company. Okay, I'll read that. Last, I'll be having fifth, statement of consolidation. So over here they have given some financial statements position. I think you can read it. Over here there is a balance sheet of the company, some balance sheets. And will this balance sheet be correct? So there is no difference. Like, okay, ma'am, the balance over here, the liability is 326. Ma'am, the assets balance is also 326. No, because there will be some errors. Okay, if this is matching, but this is wrong. But this is wrong. So you'll be having some assets, you'll be having some liabilities, which I have to now correct it. Later on, I'll be having some requirements, what I have to write it. So if you can see this, guys, this is my requirements which are posted. Yeah, these are my requirements. So with the exhibit 1, for the reference of exhibit 1, so I have to understand exhibit 1 and calculate goodwill. Okay, I told you we have to calculate things. If I have to calculate things, definitely it is not my drafted balance sheet, so I will have to calculate. So A, I can copy it. I can start over here, responses in my word processor, I can paste it over here. This I can make a bold, I make an underline. Okay, and then maybe I can start writing the answer, whatever it is. Okay, after completing this, maybe I can go ahead with the second. Discuss with the directors some correct treatments for the other company. You should use refer exhibit 2. Okay, now you go with this, you start writing in the word processor. Yeah, you start writing in the word processor about exhibit 2. So you take up this, you open exhibit 2 also. If you want, just for your reference, guys, you can copy this and you can like just open up with this, maybe if you want, like however you are comfortable with. You can read up the question. Yeah, this is something which you can read up. This is how I used to understand it. Yeah, maybe I can read it up first. I can start formulating my answer. I can just start formulating my answer, and maybe once if I formulate the answer, this thing is not required now, you can just delete it off. You can just delete it off. Okay, cool. Then if you read another question which is there in the paper, yeah, I'm so sorry, yeah, this is there. I told you in question number 1, this is what I have analyzed it, and that is what I'm telling you. The question from IFRS 9 is going to come up. Sure, it is going to come up. With the reference to exhibit 3, please show the derecognition requirement of IFRS 9. So we know when it is financial instrument, we have to record some recognition and derecognition if I am having some sales or purchase of bonds and all. Yeah, we can go ahead with third question, copy it and paste it. Similarly, last but not the least, which I told you, things become important is lists. Using the pre-populated spreadsheet, please go ahead and show the formula. Okay, now my last requirement turns around to be this, something about the pre-populated spreadsheet. So yeah, this is a spreadsheet, we have to correct it. And for that now, if I answer it, guys, I have to go to the spreadsheet. This is my answer, this is my question. So what I can do it over here, if I have to add some asset, okay, I'm adding 25. If I'm taking up the formula, I get 200. So don't you think it is very simple? Yeah, it's very simple, it's a good marker. But that for everything you have to add and subtract things. Okay, I hope you are clear with it. This is the way we write the paper. Yeah, this is the way we write the paper. Yeah, then what up next? I'll just cancel it because I have opened up a lot of tabs, right? And over here now it does not work well because, yeah, I can go to next maybe. Yeah, this is again something like my first question. If I went up, I'll get the thing. Then I can go ahead with next question, question number 2, which I told you will be having some concept of ethics also. Yeah, it is 20 marker question. So yeah, without reading all the stuff, what is my first priority to do? Start the requirements, see the requirements. Okay, there will be something like accounting treatment which I have to adopt it, addressing the issues, maybe something like that. And professional marks will be given in question 2 for quality of the discussion. For these 2 marks, you don't have to write again, but over here in the discussion of the ethical issues, you have to get 7 marks. So if you discuss it properly, you get a bonus of 2 marks that way. Okay, so maybe that can be written. For that, guys, you don't get spreadsheet, because only theory is to be typed, that's all. Up next, we go ahead with section B, which is again having two questions of 25 marks each, which comparatively are easy. If I ask you with the requirements, which standard it is hitting, guys? IS 38, intangibles. I told you intangibles turns around to be important. Yeah, intangibles. Again, something about intangibles, development. You remember some development. If I just figure it out words with my development. My students knows this fast. Ma'am, research cost is expenditure, but development, if it reaches that 6 criteria, yes. Technical feasible, this feasible, that feasible, yeah, then you can write it. Yes, technically feasibility, commercially viable. You have started with the project. You were not just in that, I wanted to complete, but I didn't completed the project. It's just in the development phase. No, then we were writing it. Okay, so maybe that could be the answer. Okay, then discuss any sale proceed if I have made a sales. Then upcoming, there is something else also about IS 38, some concept of business combination. So yeah, okay, it's not going above because yeah, this happens with the factors not in the examination. This will not work. Okay, this will not happen. Then you have to just start framing the answer. I have not framed the answer in this answer. You just remember, yeah. Over here, net cash flows from operating activities. One of the favorite question from students. Yeah, who never knows cash flow statements? Like everybody knows cash flow statements. So in the first alternative, they have asked about some IFRS measures, some non-operating activities. That means operating activities that you guys are doing it on the normal basis and you are getting some cash inflows, outflows. So you have to consider that and frame. Okay, cool, we can do that. Then we'll be having processor spreadsheet. If I want to have a word on this, okay, I can do that. If I want to write something in the word, I will write it. But if you remember, I have not written anything in question number 3. I can go next and I can complete my paper. So over here it will be written. If I don't know something, I can flag it. Achha, this I want to see it in the end. But question number 3 I have not attempted. You can go ahead and attempt it. Yeah, I can attempt it. Something or the other I'll write it. Okay, something or the other I'll write it. That's all. I go to next. This is something for practice, I'm telling you guys. Then you can end the exam. Yes, I can end it for sure. But now I want to see the examination also. I want to see. Exit it. Then mark. Please go into the mark. When you go into the mark, you can self mark whatever I wrote it. For me, if it's an SBR, what I wrote it right now, it's this. I'll self mark whatever I wrote it, and I know I have written everything wrong, so I'll not get any marks for sure. So over here, this is what I have wrote it. What I wrote it, guys, over here in the word processor, I just copied the question. This is what I wrote it. In the spreadsheet also, I wrote something like 25, if you remember. Yeah, over here, can you see? Can you see the answer? 175 and 25, 200. So this is what I have written it. But eventually, what it should be? This is the answer. Guys, this is the answer which we are supposed to write it. Yeah, and yeah, if I can make it very big, I don't know whether it will go or not. Yeah, so yeah, so see students, can you please see it? This is what you all are supposed to write it for the first note. This becomes your answer. Question number 1, corrected goodwill. Achha, explanation, you will get this much marks. So first question is of 30 marks. Up next. Okay, just give me 1 minute. Okay. In the question, in the answers, they have not yet printed up this answer because yeah, this is something which has recently came up now, so they have not presented this answer. So I'll just hide it. Yeah, this is my question. This is my second one. Okay, I can just hide it and I want to see the answers also. So maybe in this time now they have not presented the answer. Yeah, but in the next question they will be presenting because this is a newly formed question now. So they have not presented up the answer. Okay, but if I can show you something else, like for example in some another question, for example is SBR only, I'll take up this specimen which has been answered obviously because the recent paper they have not yet answered. Okay guys, you see here, this is the answer. This is the way they want to write the answer. For example, I'll come up the answers, you can check it. Okay, you can check it. Yeah, this is the way they have to answer it. Yeah. This is the way you all are going to prepare your working notes, the specimen towards the answer, the operating thing, the cash flows. Then you will be having some profits, So working note forms the part of your answer. For working note, guys, we get marks. Okay, so this is the way we are supposed to formulate it. So yes, this is what I just wanted to give you the background about our concepts which we are going to go ahead. Okay, so this is some brief knowledge of how the paper comes and from which resources we are going to study. And I hope we all know these concepts thoroughly. So yes, without any further delay, we will be resuming our class just after a short break of 5 minutes, and we'll be starting our first important topic, which is IFRS 15. So yes, let us going to understand that. So yeah, just give me a break of 5 minutes and we'll be resuming back soon with the very great concepts which start from IFRS 15. So yes, thank you. So welcome back everyone over here. Today we are going to understand with the first important concept. Yeah. So first of all, what is the first important concept that we are going to understand? So today, first and the foremost important concept that we are going to cover from SBR is the IFRS 15. So yes, students, you heard it right. It's IFRS 15 for now. So okay, if you understand IFRS 15, what it is for the first, what is this IFRS 15? What is this IFRS 15 that we are going to understand it? Yes. Okay. It's something like revenue from contracts with customer. Yeah, ma'am. We can see, we can read it. It is revenue from contracts from customers. So, when I talk to you about revenue from contracts from customer, the first and the foremost thing that we are going to learn it. What is the relevance? What is the relevance? Yeah. Why are we going to understand this standard for the first? IFRS 15. Revenue from contracts with customers. So, just to record revenue, do we require a standard? Okay, I'll just ask you one thing. What is the important line item in your P&L account? So when I prepare the profit and loss account, what is the line item which has the higher capability that you may manipulate it? Yes, for sure, the first line item which can be manipulated, it's just to show more profits which the company can make is they can increase their revenue. Means the company thinks like, let me just increase my profit for the current year. So if they're not possible to cut short their expenses, they'll think, okay ma'am, we can book the revenue. Later on we can get the money. It's okay. Let me book a revenue. So unnecessarily influencing your profit, increasing your profit is not acceptable. So the first line item which you have to always take care is to book a proper revenue. To book a proper revenue means revenue cannot be ignored. Okay, revenue cannot be ignored. If it's actual sales, only actual sales are recorded. Only actual thing is recorded. We just cannot record unnecessarily things, right? So for that, the IASB board, that is the International Accounting Standard Board, has came up with a standard which is known as IFRS 15 to upcome the weaknesses which was initially been there at the time of recording the false revenue. So yes, there is a requirement of IFRS 15 which we are going to understand it. So let's begin. Okay. So if I tell you, yeah, we'll just write it something. Yeah, we'll just write it something. When it is IFRS 15, okay. I'll just insert one blank screen. Yeah, just blank screen. So try to understand, guys. It's very simple. When it's IFRS 15 now, IFRS 15, its name is revenue. Revenue from contracts with customers. So how can the revenue be influenced? For example, in the current year, ma'am, I made a sale. If I made a sale, I have an ability to record it as a revenue. But what if I say you, I mean, this current year now, we just want more profit. So unnecessarily, ma'am, okay, I don't get money, it's okay. Bill do you make? Okay, ma'am, I'll make the bill of sales. And in the next year, what I'll do? I'll reverse the bill. Not allowed, not allowed. If you are doing such a way, what are you doing? Ma'am, we are inflating the revenue. Resulting which my profit will be inflated, resulting which the company's share value will be increased, resulting in which there is a misleading thing towards the user of financial statements. I'll mislead my users of financial statement. My financial statements user will rely on the P&L account and will contribute their money. They invest the money. So if one of this thing happen, like if even my revenue is wrong, my profits of the company will go down. Maybe my profits of the company will be manipulated. Even the company's share value will be manipulated, resulting my organization booking wrong things. So as a result, to avoid this stuff, we have came up with IASB board, that is as per IFRS 15. So when it comes with IFRS 15, what are we supposed to book it? Like when are we supposed to book the revenue? For booking the revenue, yes, those who have already studied IFRS 15, we know I can only book a revenue when the risks and rewards of the goods and services are transferred. If I ask you one thing, just tell me, just think and tell me, okay? Just think and tell me. Revenue, okay? When I come up with revenue, guys, think and just think and answer me. Yeah, it's not so easy. It's not so difficult also. First of all, yeah, I'll add now 2-3 more blank spaces. Okay, yeah, just try to understand. If I am into a manufacturing unit, let's say if I am into a manufacturing unit and I normally manufacture calculators. Okay, calculators. So what is calculator for me? Yeah, so you will say, ma'am, if you are manufacturing calculators, you are selling calculators, and calculators will be my normal inventory. Yeah, calculators are my inventory, which comes under current assets. Okay, it comes under current assets. So if I'm selling calculators, if I'm selling and dealing in calculators, yes, selling calculators becomes my revenue. For example, if I'm into manufacturing industry and I'm having one asset, let's say when machinery, if I'm selling the machinery, is it my revenue? Yes or no? Selling machinery, is it my revenue? So you'll say, ma'am, no, how can it be your machinery? How can it be your revenue? It is not something that you are dealing it on and on. Yes, this is a definition of revenue for first instance. So whatever I'm selling it, whatever I'm transferring it, it needs to be what, guys? It needs to be something on which you're operating. So it needs to be on something which I am normal operating. It should be normal operating activity for me. It should be basically in the normal course of action. But over here, if I'm selling a machinery, it's not my normal course of action. So I cannot book revenue. Yeah, you cannot book revenue. Then what if I have made a sales? Definitely I can book a sales. But if I'm having any income, it will be recorded in other income and not in revenue. Okay, it will be basically in other income and definitely not in revenue. So sales from this machinery will never be considered as a revenue. It will be sales from other income only. So what if I'm telling you calculator, it is a sales? Yeah, it's a sale, it's an inventory, it's a sale, it's a normal sales. For example, example 2. If I am into a manufacturing business, or forget about manufacturing, I am into a retail business, where retail means I normally purchase and sale. For example, if I am into a retail business of mobiles or laptops, so what I do, I normally purchase mobile, I'll sell laptop. I'll purchase mobile, I'll sell mobile. I purchase laptop, I'll sell laptops. Is it my fixed asset? Not fixed. Is it my non-current asset? No. If I sell these, for example, so if I'm selling, let's say I'm doing the sale of laptop, yes, you can book a revenue, because to sell and purchase, it is in your normal course of an action. So yes, this becomes the line item where you can record revenue. So guys, please don't get confused between the assets, that is basically the non-current assets, and the current assets. So on what should I book the revenue, on what should I not book the revenue, on what should I book the, let's say, revenue or other income, that way. Okay, so this is your first basic thing which you should know. Okay, or it comes up with goods and services also, which is basically in my normal course of an action. Only then I can book it as a revenue. I hope you guys are understanding this concept for the first. Yeah. Now, if I made a sale, can I book the sale today? Can I book the sale like a revenue today itself? Just think and tell me. If I sold, if I sold a laptop today, okay, if I sold a laptop, just try to understand it, okay. Over here, if I sold a laptop today, let's say my date today is 8th of November 2023. I sold it for sure. I sold it for, let's say, $20,000. Okay, 20K, basically $20,000. But what happened? I sold it to some X party. I sold it to Mr. X. But Mr. X made the payment. He didn't make the payment. He didn't paid. If he didn't paid me money, can I book a revenue? Yes or no? Can I book a revenue? He didn't pay. He told, okay ma'am, I'll pay you after 2 months. That means my year ends on 31st December 2023, and over here guys, he is going to pay me payment on 8th of Jan 2024. On this period, can I book this 20,000 as a revenue, yes or no? Students, we can book a revenue. Yes, it is a revenue. Why? I know. Most of the people would have thought, yeah, we can book a revenue. Yeah, we can book. Why? Baba, it's something we can book now. The risk and rewards have been transferred. It's just that we can book a credit sales. Yeah. So this Mr. X will be my debtor, which I can record it in my financial statements. Yes. So realization of cash is not concern, means you don't need to realize cash. No, cash realization is not at all a topic. Cash realization is not at all a topic. For cash realization, we are not going to do. But if the risks and rewards are transferred, yes, it can be my sales. So yes, I can book it as my sales for sure. Yeah, this is the concept which we need to know. Okay, now if I understood this, we are at a good position to start with the standard, which is IFRS 15, which talks about revenue from contracts with the customers. Okay, revenue from contracts with the customers. If you break down the word, it's revenue. Means something you're going to realize it in forms of money from customers, my debtors if they didn't make the payment, or my people or my customers who are going to make the payments for sure. But what is this? From contract. So what we have to enter into contract? Can we have to enter into legal contract? Always a written contract? Not always, but obviously there should be a contract. Contract means like two parties should come up together. Like I promise to make you sale, you promise to make a purchase. For one party it will be an obligation, for another party it will be a right. My obligation to sell you things, your obligation to pay me. My obligation to sell you things, your right to receive it. Your obligation is to make the payment, my right is to receive the payment. Yes, that way. So when it is contract with the customer, it is not required to be legal. For example, if I went to the shop to purchase one biscuit, only just one biscuit, I told him, oh, I want the Parle-G biscuit. He told me 5 rupee. I just gave him. Even verbal is a contract. Means it should be both the ways. Okay, it can be legal also if it is a huge contract. It can be normal if it is a normal contract. So when will a person record revenue from contracts with the customer? So yes, for that, let us begin with the standards. So for example, whenever you are recording the, see guys, whenever we record the contract with the customer, we have to go ahead with this 5-step model. And this is what, if in your exam comes, this can be tested. For example, this 5-step model. Yes. So what's the 5-step model? For example, if I am entering into a sales. Yeah, in this chapter now, when it is IFRS 15, always we have to think from the perspective that we are the seller. Why? If I am the seller, I will record the revenue, isn't it? Yeah. For example, if I am going to sell one calculator, okay, what I'll do? First of all, I'll come up with the customer. He'll come up, we'll identify the customer. Achha, this customer wants to purchase, okay. Then I will understand how many things I have promised to sell him. How many obligations the seller is having to sell him. Like, is it only one calculator I'm going to sell it, or 100 calculators? It is 100 calculator. It's not a different obligation. It's one obligation only. But number are 100. But what if I say you, I'll sell the calculators also, I'll sell you the mobiles also, I'll sell you this also. Achha, it's a different promises. Over here, when it is identifying the performances obligation, means it's a promise to sell. But how many promise? That is something which we need to know about the performance obligation. Then we have determine the transaction price. So how will I determine the transaction price? Okay, determine the transaction price. I will find out. This is my transaction price. This is the price on which I have to pay. Cool. Yeah. This is a price which I have promised to receive. Yeah, I am the seller. I'll receive it, isn't it? Yeah, I'll receive it. For example, I am getting an X amount. For example, in the bill, in the bill, for example, you go to purchase one air conditioner. This is what I have purchased it recently. So if I purchase air conditioner, in the invoice, they'll be writing, this is the charge for AC, this is a charge for installation, this is a charge for service. If they have bifurcated, it's good. So we have to pay a wholesome amount, and they will book their revenue individually. They will book some revenue for their AC as a good, they will book some revenue for their installation, etc, etc. So now what it is, they have to allocate the selling price into the performance obligation, different promises, and last they will recognize it as a revenue once everything is satisfied. So if I write it over here, guys, please learn this, because I know in the examination it will be asked, like you will be framed a question where some or the other topic will be tested, and you have to say which method it is, like which model it is. Like it's basically over here the 5-step method, right? 5-step method. If it is a 5-step method, what is my first step, guys? What is my first step? Over here it's my 5-step model. Okay, my first step is to identify contract. If it's to identify the contract with customer, I need to know, acha, is it a verbal contract, is it a written contract, who is my customer, who has promised me to make payment, how much payment, when he'll make the payment, everything needs to be written or oral or whatever it is. So it needs to be a contract. Second over here comes is, I need to identify how many promises I have made, means how many separate performance obligation I have set it. Okay, Baba, this much performance obligation are there, means I will be doing this, I will be selling you mobile, I'll be selling you along with that charger. For example, it's iPhone. With iPhone they didn't use to sell the charger, but if they separately charge a charger, for example, if they separately sell mobile, I'll be selling you one promise to sell mobile, another promise to sell charger, oh my god, another promise to sell warranty. Oh ma'am, there are 3 things, yeah, for example. So it becomes 3 separate obligations. But what happened? This is what the seller knows. Acha, I am giving you mobile, I am giving you charger, I am giving you warranty, this, that. But I didn't want to show the price individually for the customer. I'll just charge him one single price. I'll just charge him one transaction price. Let's say my transaction price I charged for all those 3 stuffs was $90,000. Okay, customer will pay me 90k for sure. Will I record 90k only for mobile? No ma'am, no. So you'll say, ma'am, please see how much to allocate. Achha. Then you will find out something which is known as standalone price. Means you will see, if a person can sell only mobile, if I sell only mobile in the market, I can sell it at $60,000. Okay, cool. If I only sell, only sell charger, I may sell it for $25,000. If I only sell warranty, my warranty is $10,000. Oh, but ma'am, if you take up the total of all those 3 stuff, 60, 25, 10, it comes around to be like, it's a 95. Yeah, ma'am, it comes around to be 95, okay. Just give me a minute. I can just cut it and I can just paste it over here. It's not going to come up, okay, yeah, if you can see it. Yeah, so it is going to be basically, yeah, it's going to be over here. Yeah, control, I don't want any other options. Yeah, it's pasted over here. Yeah, cool. It is going to be 95 over here, guys. It's going to be $95,000. But you will say, I have given them only at 90,000. Yeah. I have allotted only 90,000. Yeah. So, ma'am, what I have given? I have given any discounts? Yeah, maybe 5,000 discount you have given. It's a new customer. So now what I have to do? I have to allocate this 90,000 price with these ratios, with this and this. That is with 60,000 ratio, 25 and 10. So yeah, that is something in the question we will do. And I will book that much as sale. Means for mobile, I'll book this much sale. For charger, I'll book this much sale. For warranty, I'll book this much sale. So students, please don't worry. Please don't worry. I'm telling you, please don't worry. I'm just ignoring all the stuff for now. We have a concept for that. We will be learning it for sure. I'm just writing it over here for us to understand it. Okay. After doing transaction price, what I did it, I allocated the transaction price, the TP, to separate performance obligation. How many promises I made it? Based on that, I will be setting the prices. And at the end, if I'm managing all the stuff, last but not the least, I can record the revenue. Now I can record the revenue from customers. Okay. So guys, this is what we need to learn it. This is the 5-step method which we are supposed to learn it. Yeah. So without any further delay, let us understand the first step model. Yeah. I hope you guys are getting it. Yeah. It's very simple. It's very simple. Like there is nothing difficult in that. But I just wanted to start with a good standard, like a simple standard. So yeah. Here we are. Okay. Yeah. The first and the foremost thing is first point is, guys, identify the contract with the customers. So first of all, I need to know, this is my customer, this is my customer. It's a customer. So customer has to be very clear. Customer ko pata hona chahiye. Customer should know that he has to make a payment within so and so days. The customer should know that he'll be receiving this or this goods. So it will be a right and obligation thing for both the parties. So yeah, the parties have approved it. Means on gunhead, you have to purchase it. No. Both should be willing to purchase and save. Yeah. The parties should have approved and committed. Okay, Papa, they'll be fulfilling the contracts and then, yeah, they'll be fulfilling the terms of the contract. So they will be committed to fulfill the terms of the contract. And each party has the right regarding the goods and services to be transferred and identified. Yeah. This is very important. There should be right and obligations for both the parties. For one party, it is a right. For another party, it is an obligation. Right means, my seller is having what right? Okay, I'm asking you, what is the seller having the right? Right to receive money, receive the consideration. Okay. If I'm telling you right for the purchaser, for the buyer, what is the right? For the purchaser, the right is to receive goods. Yeah, receive goods. And whatever are the rights for the seller becomes the obligation of the next party and vice versa. Yeah. Then it should be clear identification. Okay, Baba, what are the payment terms? Yeah, payment terms should be known. It should have commercial substance. It should not be something like charity. Oh, ma'am, for free. No, for free. You should get something. Dollars and rupees, you should get it. Yeah. And for sure, it is probable that you are going to get it. The entity is having a guarantee that next party will pay. He is not bankrupt to whom I have sold. So yeah, he is sure that he'll be receiving it. And last, the contract can be anything. It can be written, oral, verbal, implied. So yes. I hope we understood the first point, which is known as identifying the contract with the customers. If I identify the contract with the customer, there comes the concept of identifying the separate performance obligation. For understanding the separate performance obligation, I would like to explain you a transaction. Like for example, see guys, people don't understand this concept. They make a mistake. Separate performance obligation. So if I just read the theory can be confusing, but yeah, I'll try to explain you easily. So what is separate performance obligation, guys? For example, if there is a seller and seller is promising you that he'll be giving this also, this also, this also, but you know what, all these things are combined. Means if I am the seller of mobile, for example, I am having a mobile business, okay, my mobile business, and in that, what I do, I normally sell mobile plus charger plus earphones. Means what it is, it's a combination. Means it is not an option. Like if the customer comes, he says, ma'am, I only want, like he'll say, oh, I only want mobile, I don't want charger. No, you have to take. It's not an option for you. It's not an option from the customer side. You have to take. if you have to take, that means it is a set of how much obligation. It's only one set of obligation. Means it is inbuilt. So it is not a separate performance obligation. It's one obligation. But if I say you, it's like iPhone. If you want to purchase mobile, you purchase mobile. If you want to purchase charger, you purchase charger. If you want to purchase earphones, you purchase earphones. Different. And if a customer comes and purchase all those three stuffs, like he purchased mobile also, he purchased charger also, he purchased earphones also. Like the customer is having an option. If he only wants to purchase mobile, he can purchase from my company or my business, my shop. If he wants to purchase charger, he may purchase it from other shop also. But if he wants to purchase three things, now all these three things now becomes my three separate performance obligations. So 3 POs, 3 SPOs, 3 separate performance obligation. I hope you guys are getting it. Yes, means when the buyer has an option, he can purchase it from others also. But if he chooses to purchase from my company, so then it will be a different obligation. But if the buyer does not have a choice, he has to purchase from my company only, no other option, it will be known as one set of obligation. I hope you guys are getting it. Yes. So if I got this separate performance obligation, I have to put some prices also. Wait, ruko zara, sabar karo, we'll be doing it for sure. I think itna to it is enough. Let me go ahead. Yeah, this is something which we did it for sure. Now, read the theory. Identifying the separate performance obligation. If the customer can benefit from the goods and services either on its own or together with other resources that are readily available, means he can purchase it on its own. Means a customer, it's like an iPhone. Like it's not compulsory that you all have to purchase from one single store only. He can purchase it. Means the goods and services are capable of being distinct. Means he can purchase mobile, he can purchase from somewhere else. The charger, he can purchase somewhere else. Warranty also. It's not something which is inbuilt. So then it is different. So it's a different obligation. But if he is obliged to purchase everything from one shop only, you know, like you'll be astonished to know that like this thing actually happened. I have even shared in my live classes with my students that when I used to go to, well, I was very small, I used to go to school. At the time, what used to happen, whenever the books we used to get it, like before opening the school, like there was a very cute time when we had to go to school, and we used to purchase the books, textbook and all. So it's only textbook that we were used to purchase. But then they told, what, you know, in the schools, because today the education institution is also something which is running for its own profits for sure. Yeah, so they told, if you want to purchase a textbook, you have to purchase the cover, you have to purchase the sticker, you have to purchase this. Arey, why? I have already covers, I have in my my home, I have lot of stickers, but it's compulsory. If it's compulsory, even if I can purchase it from somewhere else, I am obliged to purchase from school. So yes, that becomes a single performance obligation. Yes, yeah, like things happens. Yeah, cool. Again, up next, for example, the entity promises over here, if the entity means the seller company, the seller one, if the seller one promises to transfer the goods and services to customer, if he promises, okay, I'll sell mobile, I'll sell the warranty also, is separately identifiable from other promises. Separately identifiable means if you want that, if you want this, it can be distinct. It can be distinct. If it is different, that means for making a separate performance obligation, things needs to be different, distinct. Means customer can purchase it from somewhere else also. Uspe obligation, it's not that. For example, it's covers. If I want to purchase the book cover, I can purchase from school also. If I want to purchase, I can purchase from market also. I am not forced to purchase it from school. If I am not forced, it's a separate obligation. But if I am forced, everything gets combined and it becomes one obligation. I hope you guys are clear with it. Yeah? Okay. For that, just give me 1 minute. I'm having one beautiful question. Yeah, this question. We can do this example, which is something which I have taken it from a good book, obviously. So yeah, over here, There is a company which is known as Office Solution. Okay, there is a company, Office Solution, a limited company, has developed a communication software packages whose software name is ComSoft. Okay, so there is some software packages. So there is a company which is Office Software has produced some software. The Office Software has entered into a contract with another company to supply things. So we need to know, acha, this is a seller. Office Solution is a seller. Office Solution enters into selling things to whom? Selling to Logisticity. And this Logisticity becomes the second party, that is known as the buyer. Okay, he is the buyer. And he wants to sell. How much things he wants to sell? First, he wants to sell. The company wants to sell the license. Second, they want to sell some installation thing which may be required to get the upgrades, needs to be customized. Third, the company wants to sell some technical support for 3 years. Okay. Fourth, the company wants to sell 3 years updates. So if I see, there are 4 promises which the company wants to sell. Now the things comes, whether the customer is obliged to purchase everything from that company, or he can purchase something from other company also. So what they have written, Office Solution is not the only company able to do all those 4 stuff. Means if I want, I can purchase it from other companies also. So this is not only the only company from which I can purchase. So maybe the customer is having options. Yes. So Office Solution is not the only company able to install ComSoft or technical support, but there is something provided by other companies also. So yes, that shows up me that na baba, it is not a single obligation, it is 4 separate obligations. So over here they have written the solution that the company was delivered before other goods and etc thing happened. So it is concluded that the company, this buyer, can benefit from each goods and services either on its own or together with other goods also. That means it is at his own choice whether I want to purchase all the stuff from this company or some or the other from this, some or the other from others, that way. Okay, so yeah, the promises of transfer of each goods and services to customer are separately identifiable. That is, in short, this conclusion is the goods and services are 4 performance obligation as per IFRS 15. I hope you understood it. Yeah, it's not just one, it's basically the 4 obligations which we have to book it. Yeah, it's not one, it's 4 performance obligations. If I got to know, okay, there are 4 performance obligations, now what? Okay, I understood, okay ma'am, there are separate obligations, I understood it. But now what? Now what? You have to put the price, isn't it? Yeah, we have to place the price also. So that is known as the 4th point, which is third point. First was to identify the contract. After identifying the contract, I got to know, okay, this much is the obligations which the company has to fulfill. After going ahead, we need to know at what price we are going to charge it. Okay. So it could be basically the transaction price. Transaction price can be fixed or can be variable. Any fixed amount of the part of contract is fixed too. But if it is variable, like if I have given some discounts, some rebates, some refunds, some contingent payment, today you don't pay, if this happens you have to pay. Oh, so that is known as variable consideration. For these I have very beautiful question. Just let me open up with this. I hope the question will be visible to you all. I just have one beautiful question for variable consideration. That is determining the transaction price. We have to determine the transaction price. Yeah, just confirm me once it is visible. Yeah, I just need to get the things very clear. Just give me a minute. Yeah, just let me just check it for once, guys. Please give me 1 minute. Just I need to check it on my phone. Yeah, it will hardly take 1 minute. Just give me 1 minute. Yeah, income arising of an entity. Yeah, that is something which I saw a message to me. Yeah. Yeah, it's visible. Cool. Yeah, then it's not a big thing. Okay, yeah. At times as students, I just forget to like see it in the chats. So if it is such, you can just message me on the chat also, huh? I'm like, sure, sure. Yeah, just sure. Okay. Cool, cool, cool. So yeah, without any further delay, I would just like to make it big so that it is visible clearly. Okay, so students, now we have to determine the transaction price. Read it carefully, read it carefully. Over here, I have made the things with red so that it is easily available, but yeah, we can read it. For first, the company supplies laptop computers to large business. So there is a company whose name is Taplop. Yeah, funny company, but it's okay. So there is a company whose name is Taplop company. So this is a company who provides or supplies laptop to other company in the large businesses. Okay. On 1 July 2005, so on 1st 7 25 I'll write it. The company entered into a contract with Trilco company. So Taplop company is basically what? It's basically the seller company, and Trilco company is nothing other than the purchaser. Yeah, this is something which we can analyze it. Under which the purchaser, the Trilco company, will purchase was to purchase one laptop at $500 per unit. So what is the price? One laptop at the rate of $500 per unit. Okay, this is the selling price, which we understood it. Okay, by reading the first point. There is a contract. The contract states that if the purchaser purchased more than 500 laptops, if the purchaser purchased more than 500 laptops in a year, the price will be reduced retrospective to 450 units per unit. That means what, guys? What if they asked us? Try to understand it. Okay, try to understand it. In the question they have told, like on 1st Jan, okay, on 1st July 17/2005, basically, if a company purchases laptop, okay, the purchase price is how much, guys? The purchase price per laptop turns around to be $500 per unit. Yeah, per unit. But if the purchaser purchases, yeah, but yeah, if the purchaser purchases how much, guys? Purchases, let's say, more than 500 units, what's the price, guys? The price will fell down retrospectively. So what is retrospective? To $450. Now this, if I read this, what is something which I need to give an emphasis on? So this word is very important. Retrospectively. It's not like after 500, now it's 500, and if I have purchased more than 500 laptops, now my price will be 450. No, retro means, retro means some old ages. So from pehle se means from start you have to reduce it. Okay, from start I am supposed to reduce it. Now that is the meaning of retro. Okay, just give me a minute. Basically from start we have to just like cancel it. Okay, from start we have to reduce it to 450. Oh, is that a situation? Yeah, it's that a situation. So okay, now what happened? This happened on 1st 1/7/2005. Okay, 1/7/2005 this happened. Cool. 1/7/2005. What they asked us in the question. And the year ends on 31st June 2006. Cool, like 1 year. Okay, later on what they have asked us. First thing, on these, on 30 September 20x5, on 30 September 20x5, like this is first thing. What have they asked us? Quarter ended on 30 September 20x5. Okay, this is the first quarter. They have asked us about the first quarter. And so this is a question. So if it's July, what's the quarter in July, August, September? Okay, so 30 September 20x5 is my first quarter. What happened? Quarterly they want to account it. So first quarter, the company, the buyer has bought 70 laptops from the company. Okay, 70 laptops they purchased. You cool. Therefore, the company, what happened? Just give me a minute. Okay, yeah, so then now things will be very clearly visible. So I just wanted to understand. Yeah, so on first quarter when it ended, the company bought 70 laptops. So I purchased, means I am the seller, cool. The purchaser purchased 70 laptops from the company, and the company, like I estimated, like he will not purchase more than 500. He'll definitely not purchase. What I estimated that the purchaser will not exceed 500 in the year. He'll not exceed. So what is the amount of revenue I can book in the first year? In the first quarter, guys, I can book a revenue, because I want to book a revenue for 70 sales of the laptop, where my estimation is that he is not going to cross more than 500 laptops per year. So definitely my selling price will be how much? My selling price is going to be 500 for sure. So what will be the amount of sales? 70 into 500 I can book a sales for. So if I'm booking a sales at this amount, what will be my accounting entry? Maybe he has not made me payment. So I can write now like debtor account debit, or I can write trill company, that is my debtor account debit to sales. I'll book that much sales for sure for the first. Yeah, I can book this much sales of 35k. Yeah, sure, I can book this much. Okay, so this is what I have to book it in the first quarter. They have asked us in the second quarter. Okay, something in second quarter, what will be the situation? Cool, no worries, we'll read it. First quarter is over. Okay, and they have written that they guys are not entitled for any discount. How we didn't give, it's 500 only, we booked it. Cool. Now what happened for the next quarter? During the quarter ended on 31st December 20x5, second quarter, my purchaser expanded rapidly. As a result, he purchased additional 250 laptops. So in the first quarter, he purchased 70. He purchased 70 laptops over here. Now he purchased, okay, from here 70. He purchased 70 plus 250. So I'm 70 plus 250 is 320 only. It's not more than 500. But Baba, just in 2 quarters, he purchased 320. So my expectations changed. So what happened? The taplop, my expectations, my estimations are that now definitely he will exceed the limit of more than 500 laptops. So I have to give him a volume discount, and that is also retrospective. So the thing I was selling it at $500 per unit, now I have to reduce it to how much? Reduce it to $450, that too retrospectively. Means in the current period, what I can do is, in the current period, I have made a revenue of how much? 250 laptops. I sold it at the rate of what, guys? At the rate of $450 for sure. Only this much I can book a revenue, that is 450 into 250. So yeah, this is my revenue. Ma'am, it's okay. But what about these 70 laptops that you made a sale? You booked more, na? Yes. So I have to reverse the revenue. How much? That earlier I have made a sale for. Earlier for the sale. How much can I reverse, guys? That's a big thing, yeah. Earlier for the sale, you have to reverse it. So 250 laptops now. This you booked it correct. For earlier sales, guys, 70 laptops you need to reverse. How much? Okay. For 70 laptops, I need to reduce at the rate of 500 minus 450. So $50 I have to reduce it per laptop. So I have to do what? 70 into 50. So I have to reduce it. So in this next quarter, I am supposed to book only this much as sales. I hope you guys are getting it. Only this much sales I'll be booking it, because this is nothing other than a reversal of what I have taken it in the previous period extra. I hope you're getting it. Yes. Are you getting it? Yes, guys. I hope you are understanding it very well. Okay. Cool. Yeah. So we made it this much. So they have asked us, okay, please show like how the revenue as per IFRS 15 will be booking it. So yeah, this is how we are going to book it. So why did I show you this question, Baba? It's just because there was a concept. It could be fixed also, fixed transaction price. It could be variable transaction price also. Yeah, cool. Okay, I hope you understood it. Yes. Yeah, there's something else also, significant component. So in that, whenever I am booking a sales, yeah, students, I'm going ahead with the second concept. Okay, I'm going ahead with the second point. Whenever I'm booking a sales, guys, for example, there is a concept you must be knowing, like everybody over here till now they knows that there is a concept which is known as time value of money, right? Time value of money means if I'm getting some X amount after 2 years, but if I tell him no, after 2 years I don't want, I want it today itself, so maybe some reduction price I have to give. For example, take it very lightly, take it very lightly. For example, just for our knowledge, I'm giving you $10,000 at the rate of 10%. You have to pay back after 2 years. What will be the amount that you will be paying interest for the first year? It's simple, compound interest. So I can do like that. My opening liability. What's the opening liability, guys? The loan that I have to pay, right? The opening liability. I'm booking it over here. Maybe there is something which you can see it. So yeah, means like it is something which should need to come in one page that way. Okay, 2 years. Yeah, I hope you guys are getting it. Yeah, what are we going ahead with? At the rate of 10%. 1 no 10. Yeah, this happens with me a lot, so don't worry. Cool. My opening liability over here, it's, let's say, in the year 1 and year 2 I'm having. What's my opening liability? Ma'am, it's 10,000. On that, Baba, I have to pay interest also. This is my opening day 1. How much interest will I pay, guys? Interest at the rate of 10% is something which I have to pay. So on that 10% interest, if I pay, my closing liability is this much. Agreed? My closing liability turns around to be this much. Guys, my students know this is my favorite way to solve any question, because if you solve it in this fashion, never you will make mistake. Never means never ever. Legitly, you will make no mistakes. So this, after 1 year, this is my closing liability. Opening, on that interest I have to pay. Then I get the closing. Again on the closing liability you have to pay interest again. So yeah, cool. So in the second year, this becomes my closing liability, becomes my opening. On that again, ma'am, I have to pay interest. And this becomes your closing liability. Again, understood? So this point of interest, this part of interest, where does it goes? Yeah, this interest goes in your P&L as an expenditure. And this closing liability goes in your financial position as your liability. Okay, that's your liability. Okay, clear? Yeah. Now, what if I tell you that today you are not getting this amount, you don't get this amount, you get only this and only this. Means there is some X person, for example, he wants money today. Okay, you want loan, you have to pay something more. For example, today I told that, okay, if I work for 1 year, I will get this much amount. If I work for 2 years, I will get this much amount. So I'll say, I will not wait for 2 years. Give me money today itself. For example, I thought like, for if I work for 2 years, 1 or 2 years, I'll get, let's say, I can have a sales of how much? Let's say sales, I can do after 1 year end. I can have a sale of, let's say, 5 lakhs. I can have a sale of, let's say, 2 lakhs after 2 years, like on the second year end. So I thought my sales is 7 lakhs. Sitting today, can I say today I got 7 lakhs? Today my sale is 7 lakhs? No. To book the sale of 5 lakhs and 7 lakhs over here. See, this is my first year and this is my year 1 end, this is my year 2 end. Year 1 end and this is your year 2, second year end. So over here, to book a sale of 7 lakhs, what I need to do? First year end year, here I'll make a sale of 5 lakhs. Here I'll make a sale of 2 lakhs. So I have to wait for 2 years. But what if I don't want to wait for 2 years? I want some X amount here. I want to know what is my earnings here. So what you have to do? You have to you have 1 year and 2 years. You have to pull it back by 1 and 2 years. Means you have to pull it back by 1 year here. You have to pull it back by 2 years here. What's that? I know it's very bad, my drawings and all. But you have to pull it back by 1 year. 1 year you will pull it back. Here you will pull it back by 1 year. You will pull it back by 2 years. At what rate will you pull it back, guys? At the discounting factor rate. Let's say my discounting rate is 10%. So what will I do, guys? This 5 lakhs, you have to divide it by 10%. That means you can do like that over here. For the first year, if I'm writing it here, My discounting factor is, let's say, 10%. You can do, I have explained my students, discounting factor means today if you have some X amount and if you would have invested somewhere, after 1 year you would have got 5 lakhs. For example, if it's this year, first year, you're going to get 5 lakhs after 1 year. Now after 1 year you get 5 lakhs. So if you have some money today, if you invest somewhere, you get 10% interest, so that your amount becomes 5 lakhs. So what is the amount that you have to invest it today? Oh ma'am, that I don't know. It's simple, you can do it. Reverse the calculation. 10% means 10 divided by 100 plus 1. So it's 1.1. So you have to divide it by 1.1. So this much is the amount, 454545. Now what's this? Basically today if you invest 4,55,545, yeah, if you invest this much today, for sure guys, you will get for 2 years, and you will get like after 1 year end you will get 5 lakhs. If you want to cross verify, here you can do this amount. Okay, my first year, my second year, for example, for 1 year 454545, like something like that it was. On day 1, this is my present value. If I invest it at the rate of 10%, how much will I get? If I invest it at the rate of 10%, will I get exactly 5 lakhs? Yeah, some points, it's 5 lakhs. So this is your interest and this is your closing amount. Getting it? Yes. So this is how we are supposed to calculate it. But what about this 2 lakhs? If you're getting 2 lakhs, like 1 year, no, 2 years you have to wait. So you told, I don't want to wait for 2 years, give me 2 dates, sir. So you'll bring it back by 1 year, bring it back by 2 years. So I have to divide it by 2 times. So that is, this 2 lakh needs to be divided by 1 year and 2 years. That is your amount for today. If you copy this, you find it. So today you can book a sale of not 7 lakhs, you can book a sale of 619. Yeah, you can book a sale of 619,835. You can book a sale of 619,835. Agreed? Yeah, 619,835. Okay. So today if I book this, what is this known as? This is known as your present value, PV. This is known as your present value. So that is, if I show it over here, if I'm having this much amount, 165, 285, whatever it is. Yeah, oh, I'm so sorry. Yeah, it's 165, 285, 284 or 289, I don't know. 289, yeah, 165, 289. If I invest it for 2 years, I should get 2 lakhs at the rate of 10%. Let's go ahead. If I invest it for like 2 years, yeah, this is, let's say, day one, sitting at day 1, if I invest it for 2 years. So for 1 year, if I invested 10%, I get this closing amount. And again, if I invest this much amount year end, on that also if I invest 10%, like for 2 years, I should get the 2 lakhs. Am I getting it? Yes or no? Yes. So today guys, your present value is this much. So this much sales I can book it today. I know you guys know the concept very well with the formulas also, but this is what I just wanted to explain you. So over here there is a question which says us that on 31st December 20x7, the company sold the product to the customer for 12,100, payable 24 months after delivery. Okay, so they have told that you are supposed to pay after 24 months. Means after 2 years, if you pay 12,100, what is the amount that you can receive today? What am I supposed to do? Ma'am, year 1, year 2. Bring it back by 1 year, bring it back by 2 years. So pull it back by 2 years. And they have sold. If you sell it today itself in the cash, you get 10,000. Means, you know, na, this happens. If I say today you give me cash, I will give you discount. Why? Because of this. So yeah, let's say if the rate is 10%, we can go like that. Like after 2 years, if I have to pay 12100, and let's say the discounting factor is 10%, what is your present value? Divide it over here, guys. You will get discounting factor is 10%, right? So 2 years. So year 1, year 2. What you have to do it, like present value, get it 12100 divided it by discounting factor 10%. That shows this divided it by 1.1, 1.1, 1 year, 2 years. Are you getting 10,000? Yes. So if you invest 10,000 for 2 years, you should definitely get this amount. So 10,000, invest it at the rate of 10%. After 1 year, I'm getting this. After second year, how much will I get, guys? Again, on the 10%, if I'm investing it, I need to get this much amount. I hope you guys are clear with it. Yes. Simple, simple, simple. Easy. Very easy. Okay. So this is what I have tried explaining here with the concepts. I hope you guys have understood it. Yeah, I'll just close it. I don't want to save it. Don't want to save it. Later I have something other thing also that I have to show you all. Wait. Yeah. So that is what we have learned it. Now comes the concept that after getting this transaction price, I got the transaction price. For example, in this question, let's say if it's for mobile, charger and earphone, I was giving you question if you remember. Yeah, I had said this question also. So yeah, we can continue with the example here. Yeah, over here, after considering this, we need to allocate the transaction price. I'll just insert one new slide for us. So now let's say the transaction price for mobile plus charger plus warranty means it's compulsory. You have to purchase only from me, only from me. And for that, I didn't bifurcated things to my customer. I just charged him, let's say, $1 lakh. Okay. So my customer will do what he's like, have to pay. He don't have other options any which ways. But I, being a seller, I have to book, like, there's a concept 1 + 1 free. One shot, buy one shot, get one shot free. So can I record the sales only for one shot? No, ma'am. It's like a sale for both the shots. But it's just that you are selling, showing like different thing. Yeah, you're showing like two things, but you're booking it for one. But I have to book the revenue for two. That way I can show for presentation purpose. I showed like there are two things, but to be very frank, there are three things. But to be very frank, it is not three things. It's only one. Like one thing I just showed them. Like, okay, for one only thing I just made the payment. But for me, I have to book it for all the three revenues over here. Means some X amount I have to book it for mobile sales. For Y amount I have to book for charger. For Z amount I have to book for warranty. Yeah, yes. So what do you think? How much should I book? Yeah, ma'am. That is something which we don't know, right? Small. No, small. No, it needs to be very medium. Yeah. So how much can I book it? For that, now guys, we have a concept which is known as, I need to know if I am selling individually. If I sell individually, if I sell the products individually, what I don't normally charge. If I sell individually, let's say if I sell individually mobile, I charge $90,000. Cool. If I sell only charger differently, I charge $10,000. If I sell warranty, I normally charge $20,000. Oh my god. Means if I sell individually things, I am charging $120,000 as my stand-alone selling price, SSP. My stand-alone selling price is this. So what do you think? What is the percentage of selling? What is the percentage of mobile's revenue that you are booking? That is 90,000 divided it by 1,20,000 into 100. Okay, so out of this 1,20,000, your 75% revenue is from sale of mobile. Do it now. For mobile, it is like 90,000 divided it by 120 into 100. It's 75%. Same goes with the charger also. I'm not calculating, you only tell. 10,000 divided by 120 into 100, which shows up me a total sales of 8.3333% out of the total income. For warranty, 20 divided by 120 into 100, which gives me up a total of 16.67%, which makes up a total sales of 100%. Yes. So this is the individual selling price. Yeah, this is the percentage. Now what is my liability? Okay, now I have to understand that this is the price which I have charged it. Received from my customer. Now this price of 1 lakh I need to allocate it between mobiles income, between chargers income, and between warranties income. So how much will I sell it? Guys, how much will I book it? I will book it in their pro rata basis. That is basically in their ratio. Means out of this 1 lakh, my mobile's income will be 75%. Yes, my charger will be 8.33%, and my warranty will be 16.67%. So if I want to know it, what will be the income? Yeah, we can get the information about over here. That is 1 lakh into 75% means how much, guys? Yeah, do it 1 lakh into 75%. So I need to record the income of $75,000 for mobile, for sale of mobile. Yes. For charger, it needs to be 1 lakh divided multiplied by 8.33%, which comes up to $8,330. And charger, it will be like $16,667. So if I take up the total, it will be $1 lakh. So now whenever I am booking it as a revenue, I have to book it individually. Yes. So that is known as allocation of transaction price to each and every item. I hope it's clear. Yeah. So what I did, I just allocated this. I just allocated the selling price which is given in the pro rata basis between the things. Between these standalone things, I have just pro rata basis. I have bifurcated. Yeah. With theory, you will understand it more. Give me a minute. So now what I have to do it, guys? Allocation of transaction price to separate performance obligation. First, find out what is the standalone selling price. Means if I am selling things individually, or if I am not selling things individually, but this is what normally other industry, same thing, they are selling it individually. So what is the normal price? So the standalone selling price is the price at which the seller would sell the promised goods and services separately. Whatever is the price. Okay, this is my separate price. For example, for mobile it's different, for charger it's different, for warranty it's different. Okay, cool. Then what I should do? I need to know what is the price that I have charged, I have allocated. This is my transaction price, my total price, my $1 lakh was my total price. So this is the transaction price, which now I have to allocate it to my different obligations. In which proportion, guys? In the proportion of the standalone selling price or on the pro rata basis. If I allocated this, now I can book a revenue. Simple. I hope you are understanding it. Yeah, it's very pretty easy. Up next, we have completed this also question. And last but not the least, what will I do after allocating the prices also? Now, once all the stuff is done, like you have made, first of all, you had a contract also with customer, then you had made the separate performance obligation also. Yeah, ma'am, I have made the transaction price, fourth, I have allocated also. Now, if I have completed all the stuff, I am at a position to record the revenue now. Now, revenue recognition occurs. But in that also there is a problem. How? Just imagine. When will I record the revenue? Can I book it today? Or I want to book it like on and on and on. For example, if it's a milkman who comes and gives milk at my place, I normally make him a payment after 1 month. He daily gives me services, daily. What should I do? Should I book it today itself? Or should I book it over the period of time? So we have two concepts in that. Revenue recognition. Yeah. We have two concepts in that, which is known as revenue recognition. It's normally to be booked in two phases. Like at a point in time. For example, if I'm selling a mobile, I sold a mobile. I'm in the business of mobile. Sold the mobile. As and when I sold, I just booked my revenue. It's over. What if I don't need to book it today? Today itself. No. At a point in time, no. Over a period of time. Means not today. Over the period I have to book. When something, the services and the goods you're getting it continuously, you have to book it. Like you have to make it prolong, and you have to book it over a period of time. So what it is known as basically over a period of time means, for example, the best example, the best example is about the builders or the construction company. What's the construction company's meaning? So maybe you get confused with this, but for this let me understand, let me make you understand after 5 minutes. But first we'll learn about at the point in time. At the point in time, if the customer over here, at the point in time, if the customer does not receive and consumes the benefit until the contract is over, revenue should be recognized at the point in time. Means there is no services which is ongoing, going. It's done, I recorded it. Over a period of time means I am going to consume the benefits on and off. For example, the milkman, the newspaper one, I'm going to get the services. I'm going to consume, the customer is going to consume the benefits. So yes, the seller has to book the revenue over the period of time. For these guys, we can do it after some time. For these is pending because I have to show you some good concepts also. But for that, we need to wait for some time. Yeah, for sure, I'll be doing it. Yeah. Now, there is a situation which is known as revenue with some common type of transactions. So what are the common transactions? So guys, there is a concept of warranty. So how will I book the warranty? For example, try to understand it. Try to understand it. So you will be saying, ma'am, I always am opening up the spreadsheet. Yeah, because I want one blank page to write. So when it is warranty means, for example, if my company, I'm selling, let's say washing machine, okay? Washing machine. So what I did it, okay, along with washing machine, I sold to some people. I sold washing machine plus 1 year free warranty. If it's free, is it seriously free? No. As a seller, they have to book some income. For example, when I sold the washing machine, I charged $50K. Yeah. In that definitely I'll be having some portion of washing machines sale and some portion of warranty sale inbuilt. If I normally sell washing machine without any warranty, I charge 48,000. And if I sell only warranty, I charged 5,000. So these two are known as what? Yes, stand-alone selling price. So my stand-alone selling price turns around to be 48 plus 5, which is 53,000. Standalone. So now what I did it, I sold the machine at what amount? I sold the machine and I charged how much? And I charged $50. Now this 50 I have to bifurcate between the warranty and what? And the washing machine. So now what if I bifurcate between washing machine and warranty? So you have to get what, guys? The percentage. You remember? Yes. So what's the percentage? 48 divided by 53 percentage. Like 48,000. 48 divided by 53. Into 100. Are you getting some 90.56? So basically it's 90 percentage and these expenses 10 percentage. Yeah. So here out of 50,000, 90 percentage is an income for machine, and out of 50,000, 10 percentage is an income for warranty. I hope you guys are getting it. Yes. So it turns around to be $45, and over here it's 5,000. So if I just take up a total, I get 50,000. So the concept is same. If you are giving something as free warranty, it is not free. It's not free. You have to have some expenditure for that also. You have to have some expenditure. So yeah, I have taken a round offer. It's 90 point some XXX amount. That's the reason this also and this also is same. Otherwise, it is to be different. Okay, it's different. Yeah, it's different. Okay, yeah. I just didn't want it that, but it's cool. Yeah. Yeah, it's okay. I hope you guys are getting it. Yeah, I'll not be wasting more time for that. Yeah, like it's 5,000 over here, 10% each, and over here also it's 5,000. Yeah, cool. Yeah, we'll just read it for once, the theory. Okay, that's very simple. It's very simple. Okay, so what is warranty? Warranties are accounted for separately from the underlying goods and services. If the customer has the option to purchase a warranty separately, like if he's having a warranty separately from the products to which it relates, it continues as a distinct product, and yeah, we did exactly what we wanted to did it. Yeah, same way. Now, what is principal versus agent's relationship? Yeah, this is a concept that we have. Principal versus agent. So, who is the principal and who is the agent? So, when I normally say agent, we know that the agent will be normally getting what, guys? Agent normally gets commission. So, what do you think if I wanted to sell, let's say, I wanted to sell cameras. My business is to sell camera. I normally sell cameras. So I am the owner of the camera. I am holding all the inventories of camera, a lot of camera. And what I say, I gave that cameras to my agent, and I told agent, okay, Baba, you have it, you sell it, how much it has been sold. After 5 months, if nothing has been sold or something has been pending, you give it me again back. That means, who is having the responsibility? Who is having the risks and rewards? Is it the agent? No, ma'am, it's not the agent. It's the principal who is going to set the prices. Okay, now this much amount you have to sell it, and the principal is going to take up the last responsibility if it is not been sold. Yes, that means when it is principal and agent relationship. So why are we understanding this? Because principal is a person who is going to book in his financial statements and P&L statement revenue from sale of camera. He is going to book as in much it has been sold. Principal is going to book, and agent is going to book only sales, and that to what? His commission income. That's all, his commission income. And if you see in the financial statement, in the financial position, who will be having inventories? It's an inventory of X amount. Who is having inventory? It's the principal, because principal will be the ultimate owner until unless it has been transferred to the customer, all the risks and rewards. It's for time being. I have arranged agent to act on behalf of me as a principal. Yeah. So this is the meaning of principal versus agent's relationship. I hope you guys are getting it. Yes, it's very pretty simple things are there. So yeah, if you read it, it is a principle. It's a principle. Yeah, it is a principle if it controls the promised goods and services before it is transferred to customer, and it's an agent if he is having an obligation to arrange. Now this word is very important, to arrange for the sale, yeah, to other party. Then what are the indicators? How will I get to know who is the principal, who is the agent? See, who is having the responsibility of goods? Who is setting all the prices? Principal. If the goods are not sold, who will take the responsibility? Like, who will take up the goods again? The principal. So yeah, he is the principal. Agent is just acting on behalf. So what are the indicators? So the entity is prime. The entity means, who is that entity? Yeah, my principal is primarily responsible for fulfilling the contract. Okay, the entity means the principal has the inventory risk before the goods have been transferred to customer or after transfer also. So who will take up the responsibility? So the responsibility and all is also being taken by the principal and not by the agent. Yeah, and the principal has the discretion, like whatever price he wants to charge, he can charge for specific goods and services. Yes, true. So that is the difference between principal and agent relationship. I hope it's very easy. Yes. Up next we have a concept of, yeah, there's a question. It's very simple, Yeah, we know, for example, Amazon and all. Yeah. So what it is, it's basically a website on which the supplier showcase their products. I want to showcase my products so that it is being sold or it is not being sold. Yeah, that way. Means if I'm the supplier and Amazon is the website, I will put my product and the customer will see and customer will like it. So who is going to book the sales? Is Amazon going to book the sale, or is it the back end? For example, over here, I know this concept is something which you guys know it, but for example over here, yeah, this is the website of Amazon. This is the website of Amazon. On that, let's say for example bags. I am the supplier. I have showcased it over here, so some X amount. And over here there is a customer. Customer will visit the Amazon's website and will like this and will place an order. So who is going to deliver? Amazon is only going to deliver. Amazon is going to deliver. Amazon is going to receive money also. If he receives money, Amazon receives money. Is it his income? No. Amazon will then transfer money to supplier, and maybe supplier will give some percentage of commission. So basically, who is known as the seller, or who has to record the revenue? So revenue has to be recorded by the supplier, and Amazon will be acting as an agent receiving the commission, and supplier will be something like a principal, because all the risks, rewards, everything will be basically for the supplier and not the agent. Yeah, clear? Easy. So yeah, you just read the question, you'll understand. FG company operates a website. Okay, yeah, so this is like an Amazon only that enables the customer to purchase things from very much suppliers. Okay, the supplier sets the prices that is to be charged and delivered directly to the customer who has paid in advance. Okay, my website facilitates payments. Okay, so the website it accepts the payment from customers, and the company gives, means the website is going to get 5% commission. Okay, the entity has no further obligation to the customer arranging the products file. Okay, is FG a principal or agent? It's clearly an agent. Why? Because answer, the supplier, means the supplier who is at the back end is basically responsible for fulfilling the contracts and not the FG. FG is not obliged to do anything. Like FG does not have any inventory risk also. No inventory risk. It does not have to set any prices. So therefore FG is acting as an agent and not the principal. So FG is going to receive the commission. That's all. Clear? Easy. Okay, so we have considered a lot of concepts, and yeah, beautiful concepts within just like, it's not even 1 hour. Yeah, and we managed to complete a lot of important questions, concepts. Up next we have like, there are not so many concepts, but yeah, now it's important concepts. Okay. Consignment sale means there are 2-3 parties who are like consignor, consignee, and the final consumer. So if I'm not able to make the sales my own, it's like dealer and all. So the manufacturer and the dealer. So manufacturer will give something to dealer, and the dealer is at the end responsible to sell the things to the customers. So again, who is going to book the revenue? Okay, the head is going to book and not the middle party. That's all. So when a product is delivered to customer under consignment agreement, the dealer does not obtain the control, means the middle one. Like we have the wholesaler, we have like the retailer. So the retailer, maybe he is not having control if the money is to be transferred to wholesaler, for example. Yeah, and no revenue should be recognized by the deliverer. So what are the indicators again, guys? The product is to be controlled by whom? The product needs to be controlled by the wholesaler, the main party. Yeah, so that is, the product needs to be controlled by the entity until a specific event occurs. Yeah, the entity can require to return the products also, transfer, and the customer or the dealer does not have an unconditional obligation to pay for it. For example, yeah, again I'll just, there's a question over here. There is a company which is known as, for example, the manufacturing company who manufactures diamonds. Okay, the manufacture diamonds. So there is a Rochester company who is going to manufacture diamonds, and he is going to showcase it with some Gerson company or Jesmon company or something like that it is. So who is having the responsibility? Responsibility is to keep with him, but ultimate responsibilities of this means, if he makes a sales to customer, he has to, I'm transferring money to him, but he has to transfer money to him. Yeah, that means everything, to set the price, to make the sales, to set the price, to take up the responsibility. If everything is basically of the main company, main person, like the main dealer, then he'll be the responsible person. So that is known as the consignment agreement. So I told you that the gemstone company. So the gemstone company is a person who is a retailer type of person with the diamond jewelries. And what he has to do, he has to keep just in his stores. whatever the diamond has made by Rochester company. Yeah, there is some arrangement with the Rochester company that the terms of which says that the Rochester company has to retain the ability to change the selling price. Acha, who is checking the selling price? Who is having the selling price authority? The selling price authority to change is Rochester. So okay, the Rochester will be the only one who will be like booking the sales. Then they have told the Gemson company, if he is unable to make the sales, he can return the unsold goods within a period of 9 months. Okay, that shows that, and everything. If the Gemson wants, he can some deposit some X amount with the Rochester also. Even that is fine. But at the end, what happens? At the end, Rochester is the one who is responsible, and he is the one who is going to show in his financial statements. So over here, it is written that in the question, if you want, Jensen company has paid a significant deposit, okay, to hold the jewelry. Cool. This deposit is deducted in the proportional basis as and when it has been sold. Yeah, so I'll get it refunded that way. Okay, so should the Gemson include in its financial statements inventory? Not required. This is something under IFRS 15. The item of jewelry should be recognized in the gemstone industry only when he gets the control. Otherwise, not. We need to access. Otherwise, the Rochester company has the ability to sell this. The Rochester company is having all the risks and rewards also, and it's not the Gemson company. So it says that this arrangement says that this jewelry should not be included in the Gemson's company. It is obviously included in the Rochester's company only. So yes, this was also something which is easy. Yes. Up next we have repurchase agreement. So this is something which is newly entered into. So what's repurchase agreement, guys? What's repurchase agreement? If I say about repurchase, means something that you have to repurchase. It means you have made a sales and you want to purchase it again. Like, okay, no, you have purchased it again, you want to purchase it again. Yes, something like today, because of some reason, I am selling it, but I want to take it back. I want to purchase it back. For example, just to understand it, huh? I am having gold. I am having a lot of gold, but due to financial crunches, what I did, I just gave that gold to the bank as a mortgage. I gave the gold. Did I made a sales? No. But my inner intention is that no, ma'am, I want it back. I want it back. I want it back. So what will I do? For example, today, try to understand it. Okay, try to understand it. First, there is a concept which is known as financing arrangement. There is a concept which is known as financing arrangement. So what's that financing arrangement known as? For example, today I want gold. Like today, I don't want gold, I want money. Today, because I want money, okay? So what I did, I was having gold. So gold, I pledged or hypothecated or whatever, pledged to bank. So what happened? The bank gave me money. The bank gave me dollar, like say 1 lakh. And now, what will bank ask? For example, after 2 years, after 2 years, when I have money, I have arranged money. After 2 years, I'll go to bank and I'll say, bank, take 1 lakh and give my gold back. Is bank mad to only take 1 lakh? Bank will kick me out. Bank will say, no. Bank will say, I want after 2 years, I want $1,20,000. Oh, why extra? Why are you charging? You have given me 1 lakh. I'll give you 1 lakh. No, you have to give 1,20,000. Hey, what's the 20? The 20 is extra, is nothing other than interest which the bank has charged, and that interest is nothing other than financing arrangement. That is known as repurchase. Means my asset I gave you, I want it back. Repurchase it by paying extra is known as financing arrangement. I'm trying to give you the easiest example which I can give. So that is first. There is an entity has an obligation to repurchase the asset, that is forward or call. Means over here, I'm having an obligation. The company, like I am having the obligation to repurchase. If I have an obligation to repurchase it, no matter if I have to pay more, I will pay more and take my asset back. So this is my repurchase. Up next, I have another thing also. I don't know whether you guys can understand it or not, but yeah, it is very important to understand these also. An entity must repurchase. It's not an obligation, it's must repurchase the asset if who is asking? If requested by the customer. Who is asking? I am asking. No, it's the customer who is asking. For example, we. Okay, must repurchase. What's that? Must repurchase. Try to understand it. Okay, try to understand it. For example, must repurchase. Okay, I am having this asset. Let's say this is my machinery one. Okay, machinery one. This is Mr. A. This is Mr. B. Mr. B wants machinery one from me, and I want today money. Maybe I want today money. So what I did, I just gave him machinery one. So what B will do? B will make me payment. But now what happened? See, for example, I'm having this machine. I don't want to use machine right now. So I gave that guy. That person paid me money. So this is, ma'am, like normal with banks. No, but there is a difference. In that, I wanted my asset back over here. Now this person B don't want machine one. His work is over. So he is going to tell me, ma'am, please take your machine back. So at the time, what I have to do? It is something like I have to take my machine back. I'll have my machine back. But should I make the payments? Yeah, I have to make the payment now. So will I make more payment or less payment? That means what? Try to understand it. Over here, my machine one, for example, at the time when I gave machine one, I got money of dollar, let's say 10 lakhs. Yeah. Over here, when I'm giving them payment, if I gave him a payment of dollar 9 lakhs, is it fine? Ma'am, you should give him 10 lakhs. No, I didn't give him. Why? Because 1 year this guy is using machine. He's doing like a leasing arrangement. Yeah. He's doing like a leasing arrangement. Means this B is using my machine. Guys, this B is using my machine. Yeah, if he is using my machine, definitely, why will I pay him more? He's using my machine. So what I did it, guys, instead of giving him 10 lakhs, I just gave him 9 lakhs. I thought like the difference of 1 lakh, over here, the difference of 10 lakhs minus 9 lakhs, which turns around to be $1 lakh, is nothing other than what I earned is a lease rentals. So I paid them less payments. So yes, this is another concept which people get confused and they leave it. And this is something which is important, guys. So yeah, we have covered over here the entity with an obligation to repurchase, an entity like I have to repurchase if the buyer told, now I don't want, ma'am, you take it. Okay. Now it's requested by the customer. So this is something which is known as repurchase agreement. So I hope even this concept is easy. I'm trying to make it very simple, guys. Yeah. Cool. Over here, the last concept for us is the contract cost. So now if you remember, I have told you that I have left one concept. You remember? Last, 5th point, that revenue to be recognized after considering first contract with the customers, separate performance obligations, transaction price, allocating. From revenue, 2 types. I can book the revenue at a point in time and over the period of time. If I want to book the revenue over the period of time, where will I book? Now these concepts comes here, over the period of time. I don't want to book it today itself full. I want to book it later. I give you example. Okay, we will take the example of builder or contractor, or like the construction one basically. Now students, please be very careful. If I'm building a building, if I'm constructing a building, let's say this is my building. Ground floor, first floor, second floor, third floor, fourth floor, fifth floor. From ground to fifth floor. What do you think? within 1 year can I complete the construction? No, how? Let's say I took 2 years to construct it. Like I took 2 years to construct it. Until 2 years now, nobody came for booking. No one came for booking. Oh my god. Like not a single person came for booking. They didn't wanted the asset. They didn't wanted the building. Achha, once the building is ready, then they started booking. So what will happen in my financial statements? In my P&L account, for year 1, I'll be having only losses. Why? Only expenditure for year 1. P&L for year 2, losses ma'am, only expenditure. But from year 3, people started purchasing, so only sales, no expenditure. So only profits for next year. Just imagine, how will my financial position, or how will my balance sheet look like? I'm very bad. For 2 years it's only loss, then only profits. No. So to streamline that guys, over here IFRS 15 has came up with the concept of revenue to be recognized over the period of time. So what they have told, you have to book the revenue and consider within how much period you have made the sales. Like what is the period, what is the thought process? For that now students, we have two things. There are two methods to find out how much revenue I can book it in from consistent. So there are two methods. Which are the two methods? Input method and output method. Output means something like out. So for example, guys, try to understand. This is my building, okay? First floor, ground floor, first floor, second floor and third floor. For example, I thought like I had an estimation that to construct full, I'll require, let's say, 10 lakhs. It's random, 10 lakhs dollar. To construct full, my estimated cost is 10 lakhs. But if I told in the year 1, what happened in year 1? I constructed this too. Year 1, I constructed, let's say, ground floor also, first floor also. And I incurred a cost of 3,50,000. Oh, 3,50,000. So what do you think, how much percentage of the work is done? So you will feel, ma'am, percentage of work is done as basically the cost you incurred, upon the total cost you thought. That is it not 3,50,000 divided it by 10 lakhs? I thought it, yeah ma'am. So I think ma'am 35% of the work is done. This is what I think. Yeah, 35% of the work is done. Yeah. If 35% of the work is done, but you have not made a single sales, but it's okay ma'am, but it's okay. I have to book revenue. So I will think, acha, this is my cost. This is my cost to complete the question. And this is something I have promised a sale for. There is a contract price on which I make a sale. My contract price is $15 lakhs. Oh my god. Means you estimated that the full building you will sell it at $15 lakh. Cool. So this is my first year. In my first year, if this is a cost 35%, 350, can you tell me first year what amount of revenue can you book? Yes, if you thought this, I am very proud of you. If the cost of 35% is booked, I have to book a revenue of 35% over here also. Yes guys, I have to book a revenue of 35% here also. That means 15 lakh, your contract price into percentage into 35%. Yeah. So 15 lakh on which I'm going to make a sale into 35%. So I can make a sale of 525 triples. Oh yeah, seriously? Yes guys. So this is my sale 525,000 and this is my cost 350. That means if you see in your P&L account, yeah, I'll just erase all those stuff which I don't want right now. Yeah, this is irrelevant right now for me. I'll take up down. Cool. Okay. Oh, I'm so sorry. Okay, now what is the cost, guys? This is my P&L account. Okay, this is my cost, this is my revenue. For example, if I'm writing it over here like this, my cost is, let's say, 3,50,000. Let's say my revenue is how much, guys? My revenue is, I have calculated right now, it's 525. Yeah, this is 525. 525. So what do you think? Yeah, in the current year I'll be having a profit of the difference minus 3,50,000. So I'll be having a profit of 1,75,000. This is a profit you'll have to book. So guys, this is what we have to learn it. Yes, means as in when I'm booking this as per IFRS 15, revenue from contract with customers, I need to know what is my contract price. Okay, this is my full cost of contract, this is my cost, this is my income, this is my income. Okay, this is my income. Okay, so considering that we have to book. So if I just go ahead and read the question, you will understand it. So it is performance obligation over the period. I told you there are two parts, there are two ways: output method and input method. Input means you calculate the percentage of work done. But if I am unable to calculate the percentage, how much work I have done, ma'am, 3,50,000 I have done, but I don't know what will be the total cost I will be incurring to complete it. Then you can use the input output method also. Output means you can take the help of surveyor. Come here, tell me how much to book, that way. Output method means I have to book the value based on the goods and services. So for that I require surveyors. So surveyor will come, they will give me percentage of work done, that much percentage of revenue I can book it. But if it is internal, means input, I know what amount of cost I have booked. So cost will be, ma'am, direct material, direct labor, etc., overheads I have booked. So input method means I need to recognize on the basis of how much input cost of labor, resources, etc. I have incurred. So that is known as cost based method. The percentage of work completion is considered. So yeah, students, we are having this question. With this we will be understanding it very easily. Suppose, yeah, contract cost. Yeah guys, this becomes the last and the second last question. That's all, and yeah, we are done with this IFRS 15 also. Suppose that the contract is started on 1st Jan 20x5 and the completion is 31st December 20x6. Okay, the final contract price is 15 lakhs. Oh, it's the contract price, means the selling price, the total contract price is $15 lakhs. Okay, and this is going to take 2 years. Cool. In the first year, my total cost was 6 lakhs. Achha, my cost incurred in the first year is 6 lakhs. Half of the work is completed, means 50% of the work is done. If 50% of the work is done and this is the cost of first year, can I understand 50% of revenue also I can book it? Yeah. Let's see. Certification of the work completed is given to this much. Oh. That means if 50% of the work is done, can I book a revenue also? Yeah, revenue of how much? 15 lakh into 50%. Is it coming 750? Yes. So 7 lakh 50 work is done. Cool. So they have given that also. So this is the cost, 6 lakhs. 7 lakh 50 is the work done, because this is the cost for the current year, this is the revenue. Hey, what's the profit? Ma'am, clearly it's visible. Profit is 1 lakh 50. Cost and revenue 1 lakh 50. So how is a contract profit I can make it for the next year? So yeah, they have written some of the things are as such which is satisfied over the period of time. So it takes a lot of time. So we have to book it accordingly. So how much is the situation? So over here, 50% of the work is done, which shows that your revenue is 7 lakh 50, and the cost which you have to incur was 6 lakhs. So leaving a profit of 150. So yeah, we can book that much. Is it easy? Clear? I have one more concept which I wanted to show you all guys, but will take some time. Yeah, last concept with which we don't have so much of questions for that, but yeah, I have made it once. Guys, there is a concept, which is known as contract asset. Yeah. People don't understand the meaning of contract asset. So what is contract asset? Before I go towards the word contract asset, let me give you one example. Yeah, the total estimated cost, the total cost of the project that I thought will take 2 years, will be let's say $10 lakhs. Okay. First year, I have incurred let's say $4,50,000. So what do you think? How much percentage of the work is done? Yeah, so you can take now 4,50,000 divided it by 10 lakhs. So yeah, my 45% of the work is done. So I think like ma'am 45% to income also I can record it, and this is something which we normally can understand. I told you total contract price means at what amount will I sell? I sell it at $28 lakhs. Oh my god, seriously, yeah, 28 lakhs. Huge. So how much revenue can I book in first year? No ma'am, revenue at the rate of 45% you can book it. This is something minimum you have to book it. So what can I book ma'am? 28 into 45%, which turns around to be revenue of how much guys? 28 lakhs into 45%, which gives me 1260. Oh wow. So if you can see, this is my cost. Yeah, this is my revenue. Ma'am, superb now. So you're having a profit. I'm so sorry. So I'm having a profit of how much guys? Profit of 1260 minus 450, which gives me up a total of profit of $8,10,000. Till here I think nobody will be having any doubts. So ma'am, where is this contract asset came into picture? Nowhere na? Ruko zara, we have this concept also. Okay, this is done. What if I say you? Ma'am, we have to pass an entry for this. Sales account I can credit it. What? Debit. For example, this revenue which I booked for 1260. What entry can I pass? This entry. What entry can I pass? What accounting entry can I pass, guys? What entry can I pass? Revenue na? 2 sales. Oh, 1260. I'll book. 2 sales of 1260 I will book. But what will I debit it, guys? Did you receive cash? Is it a debtor? For debtor also you need to have some person. So that is something like asset. So it's known as contract asset. Contract asset debit to this. Clear? So that is the meaning of contract asset. So why is it difficult then? You told ma'am it's difficult. For example, 126. Okay, 1 lakh. Okay, there is, like I told, my revenue is let's say 12,60,000. So maybe I passed an entry of contract asset debit, because I don't have any other debtor and all. I don't have cash also. Debit 1260 to maybe I'll book a sales of 1260. What if I say you in the current year there were people who purchased also? Means I have made a sales for sure. For this in the current year, if I made a sales of actually 10 lakhs. Oh wow. So now out of these guys, out of this contract asset, my 10 lakhs, if some people, nobody paid me cash, all are debtors, then what I will book, guys? So I will book like this, ma'am. Out of this contract asset of 1260, I will bifurcate how many are debtors. Okay. So my debtors are basically 10 lakhs and the remaining 2.6 lakhs are what? No cash. Now this will only be my contract asset. So now my this entry is going to get changed, guys. Now this entry is going to get changed. Now this entry will not be this. Rather, from this contract asset of 1260, this much is my debtor and this is my 2.6. So these debtors are also known as trade, bills, receivable, whatever is there in the question. So now what entry can I pass? I can pass like this. Debtors account debit to sales. Sales is sure 1260 you have to book sales anyhow, but my debtors are 10 lakhs. And the remaining amount of 2,60,000 is what now? Okay, now this nothing else is my contract asset debit. Understood? Yes. So this is a concept of contract asset. Contract asset means something like debit. I have to do it that way. Okay. So yes, guys, this is where we have completed the chapter number first over here, which is nothing other than IFRS 15 also. So not chapter number 1 for sure. Like I don't want to save this stuff also. So basically now students, this is what the first important topic I wanted to cover, and I hope IFRS 15 is pretty easy, and I tried to cover maximum concepts in the minimum time period. So yes students, regarding how the exam is going to come or whatever we have done in the first part, if you guys have any sort of doubts, you are free to give a message. Like I am having the Telegram thing also in the Instagram or whatever, you can find it out like Ashwini Bhanushali for sure. Or for the IIC Lakshya, you can always contact Lakshya for any sort of doubts, and yeah, always the comment sections are there in our chats. So yes guys, with this we have completed the first important topic, and I am very happy to start with this, and yes, more the important concepts in the upcoming classes. So for the time being, take care, see ya, bye bye. Thank you so much guys.